Starting up some YouTube. I intend to say some smart stuff today. Watch out. I got 8.5 hours of sleep, 2 cups of coffee, and I am hydrated. You guys are in trouble. Just warning you right now. Good morning, Chariot. Good morning, Ron. Guys, remember that this is an educational room and it's designed for informational purposes only. I do not, will not, shall not call trades for you, tell you how to trade, when to enter, when to exit. I refuse. You can't make me. What I'm going to do is I'm going to teach you to read your indicators. I'm going to teach you to recognize advantages, and you're going to turn those advantages into trades all by your lonesome, guys. That's what we're going to do, because chart reading is about 90% of your typical day. 90% of your day is doing nothing. 90% of your day is sitting on your hands. 90% of your day is trying to find a distraction to keep you from making bad choices when advantages aren't present. 10% of your day is pulling the trigger. Victor, man, I'm sorry for you. 4.5 hours of sleep. I might as well teach you guys a language I don't understand on 4.5 hours of sleep. I can't do it. Guys, when you learn to read your charts, and this is the goal, when you learn to read your charts, you're going to understand some key concepts. You're going to understand where the market is likely to continue. That is going to be your entry for the initial trend trade that I teach. Being able to trade with the market direction, being able to trade with the advantage of momentum, being able to trade with nothing in the way, guys. Where the market is likely to continue is nothing more than the spot where the market is most likely to bounce to continue with all the stuff going on. You're also going to understand where the market is likely to go. Likely is a very important word in my vernacular, guys, because there's no guarantee. But because of the advantages in place, you can say, wow, there's such a big push with nothing in the way. There's a really good chance that market's going to make it to the next key area. That's going to help you with profits. And then finally, you will understand where the market is likely to stop. You will ignore it as a brand new user, because where the market is likely to stop is what's going to keep you in that 90%. Where the market is likely to stop is going to be like a brick wall with red flags waving, saying, man, don't take that next trade into this area. Give it just a second. Let's see what the reaction is. And I think the most difficult thing that you're ever going to do in trading is not trade into that brick wall, because it means that you have to be patient. So we're going to learn to read charts, guys. If you are on NinjaTrader, we will talk about the highest probability trend trade I could ever teach you. It's only got 3 rules, guys. It has the first rule saying that the large chart needs strong trigger lines. When that's true, you're going to have the advantage of momentum. Remember, we're looking for advantages, not trades. And then when there's no termination conditions, none of those likely to stop the market areas, you're going to have a clear path, the second advantage. When you understand the idea of momentum and path, you're going to be able to find a lot more beyond those high probability trend trades. When you understand momentum and path, you're going to use a couple simple indicators to find a way to catch little snippets in between trouble. Nice job, Ron. We'll talk about it more. Your first entry is a trend trade entry. Your first entry is designed to put you into the market right where the market is most likely to bounce. Now, these 3 simple rules, they're easy to recognize. It'll take you a week to learn them if you put a little study in. They happen on only 2 charts. You have a large chart. It's a big chart. It's a slow chart. Guys, it takes 1 bar on your large chart to define direction. The large chart will either be green behind the first bar or it'll be red behind the first bar. Green is up, red is down. Your highest chance of success comes from trading with the trend. It will define the momentum in the market using what we call trigger lines. There are small triggers, 2 solid lines, large triggers, 2 dashed lines. Your trigger lines are either up, green, or down, red. That's how you're going to identify rule number 2, or I'm sorry, rule number 1, the advantage of momentum. And you're also going to define the areas that may be problematic. And when we talk about the areas that may be problematic, again, we're looking at a large chart. And on that large chart, you're going to see horizontal lines. These horizontal lines are the, I'm doing air quotes right now, brick walls that could stop the market. These are the areas where the market is most likely to bounce, where it's most likely to reverse. And sometimes they do break. You'll have a simple recipe using the trigger lines and a comparison against those areas to know whether or not you have the advantage of a clear path. So your first two rules can be met, should be met, must be met if you're following the plan on the large chart before you ever go to a small chart for entry. Now your small chart gives a snapshot x-ray of what's happening inside of this bar, and there's a lot of motion inside of that bar. We're going to use this one to define our entry. The point where the market right there is most likely to continue. You will be able to buy or sell a pullback to an area inside of triggers. That's going to get you into the best of the best, the highest probability. The trend trade that you can prove with a little bit of study typically wins 70 to 80% of the time. By following each of the rules, by accepting that you need three advantages, that's what produces a trade. 3 rules on 2 charts, guys, is not a lot of thinking. Your job is to not overthink. And if you're on TradingView, guess what? 3 rules. That's it. 3 rules, 2 charts. We're going to keep it simple, guys. We're going to keep it very, very focused, and we're going to take a little time throughout the day. We're going to look at your charts. We are going to watch the live market. If the rules are met per the plans I give you, we'll pull the trigger. We're going to learn the rules, the 3 rules. We're going to break them down. We're going to talk about them. We're going to make sure that you understand them. Everybody in the room has the ability to simulate. Most of you are going to forego simulation because you can't make money on simulator. You'd rather just lose it live. Guys, take pictures. Take a lot of pictures. Every time you take a trade, post a picture and say, "Hey, Mark, this is what I thought about momentum, path, and entry. This is what I saw. This is how I read my indicators." Hold on, Pete. I got you. Let me do the old re-up here. Is that better? Yep, cool. Guys, if every time you post in the room, you say, "Mark, this is how I recognized momentum. This is what I thought about the terminations. This is how I entered. These were my rules for entry. This is where I got out." What's going to happen is you're telling me how you're reading your indicators. I don't know if you remember this, but my job is to teach you to read your indicators. So if there's any challenge with your chart read, we'll discuss it, we'll correct it, we'll give you opportunities to get better at it. And if there's nothing wrong with your chart read, and you will get to that point, guys, your annotations are going to serve as a recipe for exactly what you needed to have happen in order to take the trade, and you're going to make it repeatable, and you're going to make it testable, and you're going to make it provable. And what's going to happen is you're never going to wonder why. You're never going to wonder why you got into a trade. You're never going to have to wonder if it was the right trade, because you're literally going to be able to look at your chart and say, okay, the direction was down because of the small triggers. I'm only looking down. I'm in the transition side. We're going to discuss all this. So I'm going to make sure that I get paid at trouble and get to break even on this trade. And I have room on the large chart, and I have room on the small chart. And this is my exact entry rule. And that is my trend trade, guys. That is the TradingView trend trade. Now this is start to finish. Exactly why. During the trade, you're going to have management opportunities. During the trade, you may even stop to talk about why you're holding the final contract. During the trade, you may talk about any new stops that you take. That's management. And guys, when the trade is all over, that's the picture that I want in the room. If you give me this picture with the annotations that tell me exactly why you did what you did, we'll make sure you'll get a private session with me right here in front of everybody. You'll get a private session, and we'll make sure that everything is good. Hey, good morning, OG. Did you get it all sorted out? PC's good today? Man, go see my buddy Eddie Z at Trading Computers. That guy creates monster systems if you decide to give yourself something nice for Christmas. So guys, simulation is the key. Doing the same thing over and over, creating muscle memory so that you can execute when the pressure's on. Posting in the room, right on. Posting in the room is the first step in becoming a confident trader. Getting that feedback on everything that you do, making sure that you understand the concepts. And I'm just going to say it, guys, refusing, absolutely positively refusing to not get the answers you need to become better at this, guys. This is what I'm here for. Make sure you get everything you need. And that comes from posting in the room. The second thing, oddly enough, is simplicity. How could simplicity be the path to riches? Guys, I'm telling you. Simplify. Keep it basic. Focus on getting really good at one trade. Find a way to execute one trade, following the rules. Learn how to manage that one trade. Learn how to let that one trade be your cash cow before you go putting new trades in play. Every day, and I've already done it in the room and I'll do it again right now, I hand you plans. If you are on TradingView, it's the TradingView KISS plan. We all know what KISS stands for, right? This plan is a stepping stone in your learning journey, guys. It's designed to teach you how to read the indicators. It's going to assist me in teaching you how to read the indicators. These trades are designed to optimize your chances of success. And you know what? I should say this trade, because there is one trade on this sheet. Through study, simulation, class feedback, and practice, guys, you're going to create a plan that suits your needs. And this plan tells you the two charts that you're using, exactly how to read them, and gives you a checklist for entry for the highest probability trend trade you could ever take. This particular trade, you guys are telling me, I'm not telling you, typically produces about 70% winners. It even talks about initial stop placement, managing according to the 15-minute chart. There is a second trade. There's a momentum trade. When you're good at this trade, it opens the door for that trade. It can't go the other way. There's some lessons that need to be learned. If you are on NinjaTrader, it's the KISS plan. Again, stepping stone in your learning journey. Guys, think about that word, designed to optimize. Designed to give you the best of the best, give you the highest probability, give you the warm fuzzies, where every time you enter the market, you can say out loud, scare the hell out of your cat, this trade has a better chance of winning than it does losing. I've proven it. I trust it. I refuse to hesitate. Tells you where to find your rules, gives you a checklist for entry, gives you a plan for management, gives you a second trade. Second trade is a medium probability trade, not a high probability trade. It has a different checklist. It has different management. Get really good at one thing so that you can find the rest of the things, guys. That's what simplicity does for you. Learn to read your indicators, learn to see the advantages, and then you begin to see the big picture. This keeps you focused on the best of the best until you can. You have to learn the looks so that they become easy. And guys, that's all it is trading is patterns. Trading is the same patterns over and over. It is the same entries, the same reasons for entry, the same advantages in place, guys. Having a management plan that gives the exact same exit. So one of the easiest ways to learn those patterns is to look at pictures and take pictures of the patterns. So also in the room, I gave you the spreadsheet. This is TradingView. There's your trend trade checklist. That's exactly what it looks like. Every trend trade you take is going to look like this. Boom, 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 boom. And you've got to learn that pattern for entry. And there's a lot more examples. The same with momentum trades, ideas on management. Most importantly, rule number 2, when you shouldn't be going long or short anymore, when you don't have room to trouble. All of that's made available for you. And then finally, here we go one more time. NinjaTrader sheet, guys. A trade is 3 advantages pieced together. That's it. It's not your desire for money, your need to pay rent. It has nothing to do with the girl that you're trying to impress, guys. It is momentum through strong triggers, a clear path from no terminations, and a well-defined entry that reduces risk and maximizes profit potential. Learn them individually, piece them together to create the perfect look. And once again, it's just a pattern. It's momentum. We'll discuss it. It's not reaching the next area. We'll talk about it. It's a pullback to an area inside of triggers, guys. This is the trade that starts you off. This is the trade that gives you the highest chance of success. You can look at 500 pictures of it here. You can look at the entry sequences, long and short. You can get management ideas, patterns that repeat themselves. And most importantly, on both of these spreadsheets, guys, there's a trade tracking sheet. This trade tracking sheet, every time I take a trade, I'm annotating it, talking about my advantages. Every time I take a trade, from start to finish, any management ideas that I had, all of that goes on the trade. And then that trade is presented in the room. And when you present it in the room, you say, hey, Mark, how'd I do? This is where I step in. I say, well, OG, that's the perfect trade. That had every advantage. It's the ideal entry. Your stops, your targets, everything makes sense. If I were you, and I'm not, but if I were, I would consider dropping that picture into your trade plan. That's the best of the best. Now, if you're brand new, you're probably not going to show me the perfect trade every time. Guys, there's a lot of opportunity for education along the way. So I might say, hey, you traded into a termination condition. Or I might say, hey, if you wouldn't trade into the line but waited for it to break, that might be a better opportunity. Or I might say, you know what? Waiting, being a little patient for the best entry instead of jumping in hoping it goes is going to reduce risk and maximize profit potential. But whatever I say, you're going to see it. You're going to see it on the chart. So your job, that's right, day trading is a job. Your job, should you decide you really want to be a professional day trader, should you decide you really want to eradicate the mistakes and embrace the good stuff, is every morning go back and study yesterday's trades. Anybody do it this morning? No. That's okay though. I did. Trading's an individual sport. Your results don't affect my life, guys. Remember that. Every morning I study what I did yesterday and I asked myself, what worked? Yesterday what worked was having a clear path, trading with the direction, waiting for my entry. You know what didn't work yesterday? And I'm embarrassed to say it, but I did it. I was playing on simulator, and I jacked it up 32 ways to Sunday yesterday, guys. I traded into areas hoping they would break. I traded into areas hoping they would break, and then I'd lose a trade. And then I'd get upset, and I'd take it again, and I would lose that trade. And then I'd get really upset, and I would take it again, and I would repeat the same mistake over and over that keeps costing me money. And I didn't realize it because I was so angry and just, I wanted the money. Pete, this names may have been altered and the situation may be fictitious for educational reasons. But I had to identify that this morning. I had to come back with a clear head. I had to come back without the anxiety or the adrenaline or the desire for money and say, wait a minute, trading into areas doesn't serve me well. Trading into areas results in more losses than winners. So I woke up this morning and I said, you know what? I don't care what my results are today. I don't care whether I win, lose, or draw. There is no way I'm trading into areas this morning. There is absolutely no way. I will not give myself a clear path. And that's my first trade of the day. All the room. Easy money, guys. Easy money. Trading doesn't have to be difficult, but if you don't know what you're messing up, how are you going to fix it? If you don't know where you're making mistakes, how are you going to fix it? If you don't know what your perfect entry looks like, how are you going to take it? So guys, Nexgen goes to great lengths to give you the analysis, the rules, the coaching. Everything that you need to be successful with the software has already been laid in your lap this morning, and we're going to take 2.5 hours of chart reading. 2.5 hours of live market. Here's momentum. Here's your clear path. Let's pull the trigger if it fits the KISS plan, guys. And during that 2.5 hours, you have the opportunity to ask every question that's on your mind. Every question. Hey, Mark, my indicators look funny. What do I do? Hey, Mark, I thought I had momentum. Was I right? And guys, taking pictures, posting in the room is how you're going to get to where you want to be. Keeping it simple is going to get you there faster. You are responsible for becoming the trader. You're responsible for taking the pictures. You're responsible for posting in the room. You're responsible for the after class study, for having the commitment to put into the software what it is you expect to get out of it. I'm here to help, but you got to do your part. So we're going to go through, you have your plans, you have your spreadsheets. We're going to talk about some really basic concepts, guys. And here it is on the NASDAQ. Hey, what's up, Brent G? Man, test is good. Welcome to Nexgen. Nice to see you. I'm Mark. They give me the microphone for whatever reason. Guys, I'm going to show you what the perfect trade looks like real quick. I'm going to show you exactly how to identify it, what it means to you, how you can take it, everything. Are you ready? On the most current bar, the first bar on your large chart, does everybody see the red background? If you're colorblind, let me know. I'll give you the cheat code. Does everybody see that it's down? It's red, it's down. How easy. Now, momentum is one look, and one look only. Momentum, when the background is red, means that my small triggers, the two solid lines, and my large triggers, the two red lines, the dashed lines, they have to be red as well. If they're not, rule number one's not met. Guys, momentum is nothing more than separation between the small and large. So if I'm defining momentum and I'm really trying to get good at it, I'm going to say in a downtrend, small and large triggers are both red, not read, red. There is space between the two. This means the odds are favorable for the market to continue down. This is strong triggers. This is rule one met. Is there anything about defining a strong trigger line that seems difficult? Has nothing to do with these lines, has nothing to do with price bars. It just means that the solid lines and the dashed lines have space between them and all the colors match. Guys, that's strong triggers. That's rule number one. How long did it take to type out that picture? About 30 seconds? Take it, type it. Guys, take your picture, type it out like this as you learn momentum. Go to your spreadsheet. Go to your basic rules. Get that picture in there. Now here's your cordial invitation. If you don't know how to take a picture, if you don't know how to post in a spreadsheet, if you're not sure how to get that information into the classroom, I need you to raise your hand. I'll teach you. If you don't raise your hand, I'm going to assume you do it and you just don't want to. And that's okay. That's your right. Strong triggers leads the way, guys. Rule number one has been met. The second rule is the one that makes sure that your path is clear. So it's pretty easy. This is where the market is trading. Has the market reached that blue line? Not at all, right? I've got room to trouble. Now, previous trouble can affect, so I want to make sure that all of my trigger lines are below the previous trouble. So I'm going to type this out again. With all triggers below previous, we'll just call them lines, and room to the next line, I have a clear path, and rule 2 is met. Trigger lines will tell you exactly. OG, what's the picture for, brother? Or the hand up. You need help with pictures? I got you. I got you. Cool, no worries. Let's do it real quick. Let me do this real fast and then I got you, okay? Guys, when price reaches an area and none of your trigger lines break, that's a termination condition. No trades into the area. When 2 triggers get through the area, it's still not a good look for trades. When 3 triggers get through the area, guess what? It has the potential to break. That's the second trade on your plan. And when 4 triggers get through the area, now you have that clear path until you reach the next area. So this one fits the recipe. 4 triggers through, room to trouble, my path is clear. So what I have happening on my large chart is I have strong triggers down and I have absolutely nothing in the way. So OG, do you have a capture tool? Do you have Snagit or Snippet or something of the sort? Cool. So let me know when you have Snagit up. We'll take a picture together. Are you guys with me so far? First, it's momentum, separation. Then we define the clear path. And guys, once we have both of these, we're 2/3 of the way to the perfect trade. Now we have to define an entry. And an entry is defined with a very specific phrase. OG, do you have your Snagit up? You can see it? We're going to work together to take this picture. We lost OG. Oh no. I'm not talking, Pete. I'm waiting for OG to come back. Want to make sure he gets squared away. It's blocked. All right, so I need you to work through that on your end. I'm not sure how to unblock Snagit. You're probably going to have to do something with your security settings. That would be a tech guy help. I don't have an answer on that one. I'm sorry. I wish I did. Let me know when you get it unblocked, and I got you, and if we need to stay late, we'll stay late. All right. So guys, because rules 1 and 2 are met on the large chart, I have the advantages of momentum, meaning the market will be hard to stop, and I have a clear path, meaning there is nothing in the way to create a bounce. You guys good with that? Once the large chart says go, strong triggers, clear path, it's time to go to the small chart and look for an entry. Now the small chart is very specific language, and I'm going to pull that off. That was just so you could do it. The rules for entry, guys, learn this phrase. Don't shy away from this phrase. Learn this one simple phrase. I'm going to buy or sell a pullback at an area inside of triggers. I'm going to drop that in the room. I want you guys to have this stapled to your wall in front of your monitor if you're learning the software right now. I am going to, since this is a short trade, I'm going to sell a pullback at an area inside of triggers. So what's an area? An area can be a fib. An area can be a mid-band. An area could be a yellow 1-to-1. So what are my areas? My areas are the things that can create a bounce. It can be a fib. It can be a mid-band. It can be a yellow 1-to-1. There are no exceptions. Those are your entry points. And they must be inside of triggers. What does that mean? that means that my entry point needs to be, that area needs to be somewhere above the bottom of those large triggers and below the top. Are you guys with me so far on entry? I need to pull back at an area inside of triggers, which means before the market ever begins to pull back, I know exactly where my trade needs to come from. Before I ever get a pullback, I already know where my trade needs to come from. And this is what it's going to look like live. Small charts running, leaving you, not giving you an entry. You're not making money. The fear of missing out kicks in. You're so angry. I'm so upset. Life is no good. Oh, wait. There's a reversal bar. The reversal bar signals the beginning of the pullback. What's a pullback? A pullback is a tiny move up counter to everything happening on the large chart. When I get the reversal bar, there's my trigger lines. Somewhere inside of these trigger lines, I need areas. I need mid bands, that's my lowest point. I need fibs, whoop, those aren't inside of triggers. I need yellow 1-to-1s. Guys, this little tiny yellow box represents the point where the market is most likely to bounce and continue with the large chart. Are you guys with me so far? Brand new users, what we're doing is we're defining our entry for the highest probability trend trade you could ever take. My job is to right click on a chart and activate a limit order just below. I like to give it 2 ticks below the lowest point of resistance. Why? Because this market is screaming south. Because this market has nothing in the way, or this chart has nothing in the way to create a bounce. I don't expect them to get too high. They might, but I don't expect it. And here comes our retracement. Notice the mid bands coming down. You may have to adjust if you got too tight. The 1-to-1s won't move. The mid band might. And the market comes up. This is your retracement, that small push up when everything says down. And here it comes. And my mid band keeps getting lower. Maybe I drop one more tick. I don't want to trip over pennies and miss dollars. And here comes the retracement. And boom, to the tick, a tick or two below resistance, inside of triggers. And the market is down. And in the first bar, that's already $120 worth of profit. By the end of the second bar, it gets better and better and better and better and better. Does that make sense, everybody? This is your high probability trend trade. Now check this out. How do I study this, Mark? I don't believe you. I don't trust you. I think you're full of beans. If I put that box over the top of that pullback, watch this. It's that tail. We don't trade tails, guys. By the time the tail is there and you know it's there, the market's gone. It's gone. We trade pullback to areas inside of triggers, but I can go back and find a tail and see if it fit the rules. So next bar, another tail. Let's see what happened. The market went down and it started back up and it pulled back to an area inside of triggers where it started down again. There it is, 2 for 2, guys. This was at 8:34 this morning. This isn't a historical, like this isn't me grabbing pictures after the market trying to convince you of something. This set up this morning. So I can go back on my large chart and look for that momentum and path. And we're scrolling forward at this point. You have 10 days. 90% of your day is doing nothing. Price reaches an area, triggers don't break, look at the bounce. There's our momentum. Potential to break, but not broken. On the small chart, pulls back to the areas inside of triggers. This one overruns. But that's it. Guys, those pink 1-to-1s without the triggers through says don't take a short trade. This is decisions being made at key areas. If you got in the first one, you had to manage. NASDAQ is fast. If you're brand new, NASDAQ is probably darn near untradeable. Momentum, 3 triggers through. Pull back to the area inside of triggers. We're just going to let it get us if it doesn't, because we're going to learn a lesson about divergence when it's only the potential to break. Guys, if it only has potential, divergence is probably going to mess up that trade. I'm going to close my NASDAQ right now because I don't want you guys looking at it if you're brand new. The NASDAQ is so fast. It is so hard to trade if you're not in tune with what you're looking for. So you come to something like crude oil. We'll use this one. Momentum, potential to break, circle a tail. Tail end of momentum, triggers below the areas. Let's circle a tail. Should we see what they look like? It's just a pattern. When was that? Oh my gosh, that was yesterday. That's okay. Pull back to the area inside of triggers. Can you give me a Y if you see it? What a great way to study, to learn the pattern, to learn to trust the areas. Pull back to an area inside of the retracement zone. There it is again, guys. So what I do every day is I give you guys the highest probability trade I know how to teach. I give you a trade that only has 3 rules. I give you a trade that only takes 2 charts. And I give you a checklist for entry. There's your high probability trend trade checklist. Now, I can't make you, but if you spent 30 days focused on this one trade, you would never miss strong triggers. You would always know when that advantage is present. If you spent 30 days focusing on not having termination conditions, knowing when those advantages are present, you're probably not going to make a mistake. If you spent 30 days defining the perfect entry, guys, by the end of 30 days, you could be pretty darn good at this stuff. You would know how to take the second trade. So you now have everything that you need. You have rules. You have a place to study that gives you a bajillion examples of exactly what it is you're looking for. The only thing that you don't have is, what do you call it, Pete? Time on the pond. You haven't spent the time taking pictures of strong triggers and identifying them and making sure that you understand them. You haven't taken the time to take pictures of termination conditions, to define entries, right? To say if price reaches an area and the triggers don't break, I don't have to take a long into that area no matter what the momentum looks like. I don't have to hope that Fibonacci support breaks. It's not my job to predict what the market's going to do. It's my job to recognize what the market is doing so that I can find a way to capitalize. Are there any questions about the high probability trend trade? That's it. It almost sounds too easy, doesn't it? Do you know that I had somebody send me or call me one day and say, Mark, 3 rules isn't enough. 3 rules isn't enough to be a successful day trader. 2 charts is not nearly enough to be a successful day trader. And he left. He said, I don't want to be with Nexgen. It's too easy. It's crazy to me. So, we'll miss him, but he's the one missing out. Let's talk TradingView. TradingView, I'm sure most of you will find this surprising. TradingView, where is it? Is only 2 charts and 3 rules. So there's your rules. I think the TradingView rules are even more easy. So a trend trade, the recipe for a trend trade means that your big chart's not trading into an area. Room to targets. You're going to hear that over and over. And then it says, well, your 1 minute can't be trading into areas either. Really solidifying the idea that without a clear path, you're giving up your advantages. And then the entry is a clearly defined entry. Buy or sell a pullback at an area with a close on the weak side of the triggers. So Miss Adriana is listening in today. So we're going to really talk about what the weak side, what the correct side Those words mean the same thing. Guys, these three rules only take, how many charts do you guys think it takes? 4? 7? Takes 2. That's it. The first chart, the big chart, the slow chart, guys, is the 15-minute chart. How much can you get done in 15 minutes? Depending on where you live, you could go to the grocery store, buy a gallon of milk and a dozen eggs, and come home before 1 bar prints on this chart. It's slow, glacial. We're going to use it to define direction. We're going to use it to define momentum. We're going to use it to define key targets. We're going to use it to define terminations, guys. It's the same concept as NinjaTrader. Your 1 minute is a faster chart. Again, 1 minute's a long time. This is going to define the immediate strength of the market using these small trigger lines. And it's going to define entry point. Guys, to read a large chart on TradingView, and I want you to see something. Your rules say nothing about momentum. Does everybody? TradingView users, give me a Y if that makes sense. Your rules say nothing about momentum. Nothing. Your rules say trade with a direction. Direction is defined by the direction of the small triggers. They're either up or they're down. Does that make sense? It's not even a rule, honestly. Do you know what trading with the direction is? It's smart. 15-minute chart going down, why not go down with it? Your rules don't start until the second half. The second half is make sure you have room to targets. Rule number 1 says that the 15-minute chart cannot be trading in determination conditions. No zones, no one-to-ones, no VWAPs, no outer bands. Does that make sense? So direction and room, that covers your first 2 rules on 2 charts. And then all you have to do when you have nothing in the way on the 15, when you have nothing in the way on the 1 minute, is you're going to define your entry. You're going to buy or sell a pullback at a 1 minute area, at a zone, at a mid band, at a yellow 1-to-1, but you're not going to get in at the area the way you do on NinjaTrader, guys. Your rules say when you arrive at your area, so here's down, only shorts, room on the chart lets me know to take the trade. The moment these small triggers roll up, I knew exactly where my trade needed to come from. It needed to come from the area that was higher. And then the rules say, take a close on the correct side of the small triggers. If these triggers are down and these triggers are up, the correct side of the small triggers is the downside, the one closest to my target, the one that doesn't fight the triggers going up, because you will lose that fight more than you don't. Your trend trade entries will look the same every time you take a trade. Pull back to an area, down bar that closes on the weak side of the triggers. Does that make sense, everybody? Pull back to the area, up bar that closes, that finishes, that the timer runs out on the correct side of the triggers, the side of the triggers that are on the direction that I want to go. Is everybody good with that? This little patience piece is going to keep you from getting run over. Lots. Trust me on this one. And that's it, guys. That's your entry. It's only 3 rules. Right? It's only 2 charts. It's the same look every time. But I'm going to add something to it. And I put them all in the same picture. This created a lot of confusion for people because, and I'll tell you why in a second. So direction is defined by the direction of the small triggers. It's either up or down, right? If you can't tell, If you look at it and it's at that moment where you're like, well, it could go up, it could go down, it's okay to do nothing. It's okay to wait for that bar to finish, to force them to decide on a direction. If you have room to targets, that's your green light. Go look for an entry. Now, the second step, this is where management comes in. The most current price, because these are such big slow bars, the most current price, the highlighted price, will be at one point or another in relationship to those triggers. Excuse me, 1 second. You guys do not want me sneezing in your ear. Price is either going to be, so this is an uptrend. Everybody see it? Small triggers are going up. Here's that same look blown up. There's your small triggers. There's your current price. Price is either above the small triggers. That's the strong side. Price is below the small triggers. That's the weak side. Or price is inside of the triggers. That's the transition. Does that make sense, everybody? The most current price is either strong, weak, or transition. Why do we talk about it? Well, because the strong side of the triggers is where the 1 minute areas are most likely to break. Guys, being on the strong side of the triggers does not mean that you can skip rule number 2. Being on the strong side of the triggers says if rule 2 is met, if I have room to a 1 minute area, when I get there, it has a better chance of breaking than if I'm in the weak or the transition side. Make sense? Doesn't make the trade higher probability, doesn't increase the chances of winning, just lets you know how to manage it. If I'm on the weak side of the triggers, I'm still only looking for long trades. That's it. But the weak side of the triggers is synonymous with where reversals typically come from. So if I'm on the weak side of the triggers, my 1 minute areas are even more likely to bounce, which again doesn't say don't break rule number 2, but when you get to one of those areas, it's all right to get paid. It's all right to get out, to take your money, to GTFO. Wait for the next trade, it's coming. If I am in the transition side of the triggers, guys, this means, well, those areas might break. I don't know. I should probably take profits at them, get to break even, but it has the potential to go further. Maybe I throw a runner in. Maybe I go break even and see if that last one wants to go. Because inside of one bar, you can go from weak to transition to strong. And if my picture is still up, because I was in transition, before I ever took this entry, I knew I was getting paid at that area. I knew that I wasn't going to hope that area broke, that I was going to get paid, and that I was going to go break even on that trade. I had my management plan already mapped out before the entry was ever taken. And guys, all it is because I knew where price was. Not the best trade, not an okay trade, not a crap trade. It's all a long trade. This is only a management plan. Does that make sense? I think that was the misconception that some of the people had. Well, I don't want to take a trade from the weak side. It's low probability. No, it's not. It's just a trend trade. Now you know how to manage it. We all good with that? And again, then it's just rinse and repeat, right? Take the perfect trades. So one of the challenges, and there's a few of them that happen, is we like to forego the study period, guys, because I can't make money if I'm not in a live market. People say silly things like, if I don't have a skin in the game, I'm never going to learn. And I say poppycock to that, which is an archaic term. This is from 2008, guys, and this is going to be my last little lecture. Then we're just going to read indicators, and if the rules are met, we'll take trades. We'll have fun. John Novak wrote this in 2008, and just listen to what it says. Nexgen will supply the Fibonacci-based software, the trading rules, along with the coaching that will increase your odds of winning more than losing. That's what I'm here for, guys. Coaching, giving you feedback, being a mentor, whatever you need me to be. After you choose Nexgen to be your technical analysis partner, don't worry about how long it'll take you to become a profitable trader. Worry about the process of learning. Remember, simulation of your trading plan is not learning, or is not trading. It's practicing the movements of trading until they're so ingrained in your muscle memory that you no longer have to think about trading your plan consciously. You know it like the back of your hand. You know exactly what it looks like, exactly what has to happen, exactly where you'll enter the market, and exactly how you'll manage that particular trade. You've got to commit that plan to memory. If you don't, it's going to be difficult to execute the plan. That's why I give you such a simple plan. Remember, your second goal is to simulate 25 of the same trade setups following your plan without deviation, distracting thoughts, or hesitation to act. If you are on simulator and you are scared to enter, you're going to have to work through that. If you're on simulator and you talk yourself out of the perfect trade because you're scared of losing, you're going to have to work through that. Because if you can't lose trades on simulator, going live will decimate you. Going live will throw you into a mental tizzy that is going to be difficult to recover from. Stay on the simulator if you feel that's your choice. I don't tell you guys what to do. But after 25 of the exact same trade setups, you start to trust it. You start to believe it creates an advantage. And then you're going to write down, using screencast picture, labeling your charts, what you could, should have done better. Getting feedback, posting in the room, letting me see how you're reading your indicators. Let me coach you to better trades. Everyone's different. It'll take time to become unconsciously consistent at entering and exiting your trades. The more you complete 25 of the exact same trades on simulation, posting charts for feedback in the room, and following your plan without deviation, distracting thoughts, or hesitation to act, the closer you will be to becoming a profitable trader. I think this is the one right here, guys. If you never build the trust in your plan, you'll change it on the fly based on your guts. If you never build trust in your plan, you're going to talk yourself out of things because of your guts. If you never learn to trust your plan, guys, you're going to hesitate because of your guts. Your guts are going to kill your trading. You don't have to win all 25 trades. Here's another very real moment of trading, guys. You're probably not going to be a 100% winner. I've never met one in my life, ever. But if you win 15 of them and you lose 10, you should still be a winning trader if you manage your trades correctly. Why you have to have an exit plan as well. Each time you repeat the same 25 trades and successfully win overall, then you take the chance to trade real money, making sure you can follow your plan. Here comes the phrase, without deviation, distracting thoughts, or hesitation to act. Who has been a simulator millionaire and gotten the ever-loving shit kicked out of them live? Pardon my French. But that is exactly what happened to me. 100%. Why? Because I didn't trust my plan. Because hell, I didn't even know my plan when I started. Did you guys know that the first time I went live, I had gotten so lucky on Simulator that I put $7,000 in an account and I lost 5 of it in 2.5 hours. That's what happens when you don't trust your plan or you have no idea what you're doing. When you trade real money, guys, if you fail to follow your plan and end up losing money, you are not a professional trader yet. Don't despair, but don't do too much financial damage. Guys, that's where prop firms are amazing. Go back, take another 25 trades on the simulator. Now, who has had a rotten trading day and went back to simulator for 18 seconds before they started live again? Because I got to make it back. Going into your trading with that mentality, the market owes me, I better get it back quickly. I better buy 7 more prop firm accounts and make the same damn mistakes and blow those out too. Guys, going back is not a loss. It's not a setback. It's not a failure, guys. Going back means that you want to correct what's wrong. And if you don't know what's wrong, how are you going to correct it, guys? This is expected. It's very common. You're not losing, you're learning. There's a big difference. You're learning to take the perfect trades. They can't lose. They can only not work. So becoming great at any profession has a cost. Your cost will be small losing runs with live money. That's why prop firms are a good way to test your plan. And then when you can follow your plan, make money most of the time, you can call yourself a professional trader. Typically, most traders achieve a successful mindset and the ability to no longer have to think about trading the rules consciously. They never lose it. Have you guys ever seen me take a live trade? Hopefully you'll see it today. You'll hear me talk through exactly what has to happen before it ever happens, because I have absolutely no doubts in my mind how I need to manage, how I need to enter, where I need to exit before I ever enter the trade. You will get analysis, rules, coaching. The only thing that I don't give you is the time on the pond, guys. Studying. Absolutely, I will, Chariot. This is from 2008. John Novak wrote this. Nexgen has been teaching people to day trade for the last 30 years almost. Traders haven't changed. The markets haven't changed. Guys, the market's been doing the same darn thing it's been doing forever. Let me show you something cool. I love cool stuff. You guys remember that trend trade that we just talked about on TradingView? There it is from the plan in 2004. To say that we have a finger on the pulse of what it takes to become successful, guys, is an understatement. You'll be given everything you need. Can you wait for that entry? Can you sit still until your rules are met? That's what's going to be defined. That'll be the defining moment in most of our trading careers. Can I do nothing if there's not an area inside of triggers? Can I do nothing if there's not momentum? Can I do nothing if my path isn't clear? That's what's going to set you apart. So that's my first hour, guys. We're going to do the same thing every day for the rest of your lives until it becomes second nature. So what I'm going to do right now is I'm going to click on the charts that were posted this morning, and we're going to talk about them. And we're not going to say, dang it, you did good. I hate you, you did bad. Life is not fair. I can't believe you lost that trade. What we're going to do is we're going to go back to momentum, path, and entry on every chart posted. Almost missed one of Ron's. And we're going to talk about what was good, what was working for the trade, what was working against the trade. And we're going to see what we can pull off. OG, I see you got your pictures up and going. Can you hear my voice right now? Are you in front of the computer? I would appreciate greatly if when you take a picture, so guys, if you have Snagit, if I go to take a picture and I hover over just one chart, I only get to see one chart. So since our rules rely on two charts, OG, what I need you to do is left click on your mouse in the upper left hand corner and drag that bad boy down to the bottom right, so that when you present in the room, I can see your large chart advantages and I can see your entry. Cool, thank you. One of the things you guys will recognize is that your first 4 or 5 posts are us learning how to talk to one another, me figuring out your language sometimes, because we all speak differently, right? We all hear things differently. We all see things differently. So it may take us a time or two. The other thing, OG, that I really need you to do is I need you to tell me why. So when you post in the room, guys, I love it. If you want to tell me how big it is and show me that you won, that's awesome. We'll high five. But this is an educational room. So if I don't know what you're doing, if you're like, hey, Mark, I made $500, kick ass. How are you going to repeat it? How are you going to be able to do it again? How are you going to study it to make sure that that does actually win more than it loses? You're good, OG. This is exactly what I say to everybody the first couple times they post. Please don't feel like I'm calling you out. But this isn't for me. I can look at your chart and tell you exactly why. I'm very confident in that. I can say OG saw that the large chart was going up strong and that there wasn't, and there was stuff in the way on the large chart, but he saw momentum, he saw the separation, he thought, oh my gosh, that's that momentum that Mark's talking about, and I'm just going to let the market get above those troublesome things because those troublesome things can create a bounce, but I know it's only momentum, so I'm going to GTFO before the momentum goes away. And OG, you took Ron's chili dog trade. And I guarantee at 6:42 a.m., that large chart was screaming in the direction of the trade, right? That large chart was full giddy up. Oh, I closed the NASDAQ. I forgot about that. Probably looked something like that, didn't it? Guys, the annotations aren't for me. The annotations are for you so that you can do the same thing every day. So you can enter every trade with the utmost confidence, saying to yourself, this is my pattern, this is my trade. If I take 100 of these, I'm going to lose 30. If I take 100 of these, 30 are not going to work. If I take 100 of these, there will be 30 times that this trade does not win, more likely. You have to understand why. There we go. There's my little from the pulpit OG. That's okay. You'll get there. And what you'll find is that once you understand the whys, there is no hesitation. It's just a matter of finding the patterns and doing it all over again. Over and over. Over and over. Rinse and repeat. All right. Let's talk about the pictures that are already presented. Then we'll take a break. And when we're done with our break, we'll do some live. No, you are so in the game. All right. 15-minute is down. Strong side. Management in place. The path is clear. 1 minute closed below the small triggers. I'm noticing that 15-minute, it's best to be with a trend. I like it. Paul, is this you? So the challenge on this one, Paul, and I see this a lot. Where was your pullback to the area? Was this it? If you guys would do me a favor, TradingView people, 1 minute is a long time. Give me at least a little bit of what happened before. Show me the pullback. This was at 4:47 a.m. That way I don't have to do this every time. So at 4:47 a.m., let's go see what it looked like. And it's no worries, Paul. This is my stressed out look or face, right? So let's figure out where it went sideways. That was your look here. No, don't apologize, please. Because I want to get you the best feedback I know how to give you. So it was right about 440 where you took an entry, which is right here, right? Does that look right, Paul? I want to make sure. That's it. There's those purple 1-to-1s. There's the little pokes below, right? Do you see it? Your purple 1-to-1s. There's your little pokes below. So this is what it looked like. Your entry was right there. Can we agree? Cool. Your trend trade entry was the close below small triggers up here, or your trend trade entry was the close below small triggers right here, or your trend trade entry was the close below small triggers right here. So what is this? This is you jumping the fudge in. That's it. There is no pullback. There was no break away and pullback for a momentum trade. This is you just saying, man, I sure as hell hope it goes down, and it didn't. So is it really a trend trade? I think not. It doesn't fit the recipe, right? So you're missing that one key piece. that one key piece, that pullback to an area. And the reason that I talk about it is because it's that pullback to the area that says, and let me show you exactly what it says when it pulls back to an area. I like these lessons, guys. I really do. And Paul, you know I like to make up stories about what the market is thinking, right? The large chart says, when you're looking for a trend trade, the large chart says the sellers are in control. They know where they want to go. Good luck stopping them. That's what I think. When I'm looking for a trend trade, that's what I'm looking at. The sellers have already told me, man, we're going down strong. Life is good. Here we go. The reason the trend trade works so well is because think of physics, right? Equal and opposite. The buyers fight. They want it to go up. Profits are taken. It creates this pullback, right? And without the buyers fighting, you're not leaving any room for the sellers to say, to heck with you, buyers. We really want it to go down. We rely on that fight for trend trades, guys. The trend trade takes us further away from targets. It uses areas that used to be support and are now behaving as resistance. There's a lot of logic that goes into this, but I need that fight to give me distance. I need that fight, and you can pinpoint with your rules exactly where the fight is most likely to fail, and you can pinpoint with that one little bit of entry logic. Close below the small triggers to know that the sellers have taken over and started back in the direction of everything that they wanted. And look where they went, Paul. Right to the purple 1-to-1s. And that's where the buyers said, that's our next fight point. And look what the buyers did. The buyers said, oh, we're going to try. And the sellers said, get bent. We want it to go down. Large chart said so. And they make it to the zone. Guys, relying on that fight gives you a failure point. Relying on that fight gives you a place to put your stop. Relying on that fight gives you more room to the next round of trouble. You just never got through the trouble. You sold right into the buyer's fight spot. Does that make sense? And guys, I create these stories. It's not like there's a room full of sellers and buyers with brass knuckles and bats, right? But if you think about it like that, let's let the buyers try and fail. I know exactly where they're most likely to fail because of my rules. I know exactly when they failed because of my rules. That's when I'll enter the trade. And it becomes easy. And it does become effortless. So the sellers are in control. We know exactly where the buyers are likely to fight. Does that make sense? Sellers own it. That green area is where the buyers are likely to fight. Well, the buyers are fighting. The market's going up. Whoa, that's not what I wanted to do. Let's get to it. Go, go, go. My goodness. There's the buyers fighting right from the key area. There's the sellers trying, and the buyers said, no, there's a key area. We want to fight. And now they're pulling back up to the next spot where the sellers may try to take back over. But we're not going to fight those triggers, right? We're going to wait. And if I get a close on the weak side of those small triggers, right at the failure point, guess what? I'm going short to see if the sellers want to continue down. Maybe they want to retest areas. But because I'm on the weak side, I know before I ever enter the trade, that's where profits have to be taken. If I got to close below, it's right into a mid band. If I got to close below the mid band, there's nowhere to go. I can't seem to get rule number 2 met right now. Therefore, I don't take a trade. if it all works out, from 35 to 30. Nope, from 35 to 31. 31 and a half. Is anyone good with fighting triggers for $60 per contract from the weak side? I know exactly where my stop goes. I know exactly where my entry has to come from. I know exactly where I have to get paid because I'm on the weak side. It's not giving me any entry. I have to sit still. Great stuff. Great lesson, Paul. Thank you for that. Pete, I'm going to send you a nickel so you can buy bigger font. Weak bottom, odds favorable momentum. I like this. So the one thing Pete doesn't mention on this chart, when price reaches a mid-band, guys, this is how you're going to define the mid-band as a termination condition on the large chart. This is what we call the gap theory. So if price reaches a mid-band, large triggers have room for a full bar before they get hit. Full bar away. Do you see how the reversal bar was able to print and still not come in contact with those large triggers? That makes this mid-band a brick wall. Well, when they close that gap, they're going to make decisions. This is where the buyers are either going to take over or the sellers are going to push down. I don't know what's going to happen. Pete doesn't know what's going to happen, but Pete says, if I can get strong triggers from the decision-making point, I'm going to ride that momentum up and make a little money on a momentum trade. Beautiful trade, Pete. Letting the gap close, letting the decision be made, getting in with the advantage. Beautiful trade, Pete. You're like an artist, almost. Whoops. Termination reverses the market. It's a strong top. Odds favorable momentum. Going to be hard to stop. Look at his first entry. His first entry says, you know what? With all that momentum and room to something solid, let's see if we can make a little money on the way down. If it decides not to go, no worry. We'll get out. We'll wait for the next trade. With two triggers through, all the momentum, Pete says, well, there's the perfect trend trade. Pull back to an area inside of triggers. Let's see if we can't make a little more money. Like a rock star, Pete. This trade right here, guys, is jumping in because you have momentum and nothing in the way. That's Ron created it. It's called the chili dog. These fail all the time. That's what it looks like when they fail. Guys, if the perfect momentum trade, if the perfect jump-in trade fails, and the large chart supports it, it typically turns into a trend trade. Pete knows that. He's got 10,000 pictures in his arsenal. And then he just treats it like a trend trade, all the way down to Fibonacci support. Beautiful, Pete. And guys, if you have questions, throw them out there. Have not, Wayne. Not yet. Momentum. Well, not really momentum. Triggers all up. Clear path. Odds favorable momentum on the small chart. Get paid. Get paid. My job is to get paid. And then, Pete, this is where you go a little outside. Termination condition. Divergence from a termination condition. Second divergence from a termination condition. Small triggers down. Wrong side of everything. Not odds favorable momentum. Pete says, you know what? I've made so much money doing it the easy way. I'm going to see if one of the hard ones works. And you pulled one off on the market. Does that make sense, Pete? There's a point, man, where it's okay to wave the white flag. You may have been at that point. Two divergences from the fibs. Wrong side of the triggers. Absolutely. So, OG, it's called the gap theory. This is what makes the classroom great. Thank you. It's called the gap theory. And what the gap theory says, you know I've got pictures for everything, right? If price pulls away from the synthetic triggers, and when we say synthetic triggers, guys, we're talking the large triggers on the large chart. I know you do, Wayne. I do too. Wayne, I'll tell you a secret. When the gap theory is in play on your Renko charts and your 15-minute small triggers are angled in the direction to close that gap, that is one of my favorite trades if you have both platforms up. I'll see if I can find pictures of it. So what happens, OG, is price pulls away from the large triggers. And one of the things that happen is price almost always returns to the large triggers. That's how we define our entries. So let me do this real quick. My goodness, I got a lot of stuff up. NinjaTrader's gone, can't do it. So let's just do it this way. Price returns to the large triggers. It's why we get these amazing entries. So the gap theory, when price accelerates away and hits really anything, whether it's a mid-band or a fib or one-to-ones, anything on your large chart, if those large triggers are down below the reversal bar marker, a full bar away, price is more likely to close the gap to those triggers than it is to not close the gap to those triggers. Price accelerates, hits the mid-band, hits the blue Fibonacci. Large triggers are a full bar away. Zoom, there it goes. Closes the gap. Pretty cool, right? Price reaches the mid-band. Triggers are above the reversal bar marker. Just absolutely no more short trades into that area. It's likely to close the gap. Price reaches the mid-band. Large triggers are below the reversal bar marker. More likely to close the gap. It's amazing how often that gap theory comes true. And all it is just a pattern. It's just a pattern. It's not an entry for a trade. I can't stress that enough. I don't teach a trade that uses the gap theory. But what's cool, OG, is with a little bit of time in the saddle, you'll probably create one. Wayne did. Wayne said, I totally have a trade that uses the gap theory. That was probably it right there. I can't even see the indicators, OG. Dollars to donuts. That was the gap theory. We'll see what happens. Good stuff. Good stuff. All right, guys, let's see who's next. Oh, good, some TradingView. You guys know that if you're in the funding company, everything that I teach for TradingView is a freaking amazing way to beat the hell out of that evaluation. So let's see what you did. Trend trade, triggers are up. Prices in transition. Space to trouble. Small chart, price pulls back to the one-to-ones. You get a close above. You enter with a close above and room to trouble. And it just gives you money. You were out at the top, right? You couldn't have ever predicted that, Victor. Victor says from transition, I'm getting paid at trouble. Beautiful trade. 170 from 59 to 63. So Victor, the only question that I would ask, and guys, I'm going to ask you guys these questions. Whether you choose to answer them or not is up to you. From 59 to 60 is $20 worth of profit. You guys will have to pick your number. Me personally, if I don't have at least $100 profit potential, I'm not gonna put risk on a trade for 20 bucks. It doesn't make sense, right? It doesn't make sense. But it's the perfect entry. And you made some money. Trading into trouble, guys. There's a reason it's rule number 2. There's the perfect one, right? There's the close below. There's the entry. There's the money. Victor, we took the same trade. 100%. 100%. Out at 39. I like it. Out at 34.25. Love it. Perfect trend trade. Trend trade short. Paul, same trade. Beautiful, perfect entry. Nothing wrong with that entry. Get paid at trouble. Since it's transition, protect your investment. I'll be darned if I get mad about $200 in a couple minutes of my life. Really well done, Paul. Perfect trade. Isn't it easier with the pullback? You guys don't have to answer it. I think trading is 1,000 times easier with the pullback. Look at all the space that you had down. Nicely done, Paul. And here's what I like. Victor's on one side of the country. Paul's on the other side of the country. They took the exact same trade. Why? Because it's a pattern that they know works more than it doesn't. That's it. All right, trend trade. Is it? It really is. But you got to learn to, right? Triggers down, price on the weak side, space to the next area. On the large chart, right, Victor? Trading directly into trouble on the small chart, and they take your money. Rule number 2, not Matt. So let's talk about what breaks an area. You do. But so should have gotten out when price hit mid-band? You think so? Do you see how where my 4 arrows are? This is resistance, right? Does that make sense, everybody? Price traded up to resistance. We're hoping resistance holds so we can take a trend trade. Does everybody see where price breaks resistance? Are you guys with me? We're going to do just a little logical thought. A to B. So price breaks above. What does resistance become? Do you guys remember this lesson from termination conditions? Resistance becomes support. So if it takes price breaking to break resistance, what does it take for that support to become resistance again? Uh-oh, we're going full circle. It would take price breaking that support to consider it resistance. This is the look right here. I call this the prairie dog. That is price peaking below support. Support! But not breaking. Lower probability, trading into trouble. Does that make sense, everybody? And I think the visual is great on this one. And Victor, you're not alone at all, right? You're not alone at all. You got to put these in there. And I think you put it. Have to post the losers. Why do we post the losers in the room? Not because I want to shame you. Because I want to turn it into the best lesson ever so that you can avoid this loser next time. So all of my TradingView users, give me a Y if that makes sense. Resistance is always resistance until the break. Support is always support until it breaks. Great stuff, guys. Good lesson there. Victor, thank you. I'm telling you right now, you guys don't realize it, but you're a collective. And every time you post in the room, you make everybody better. Every time you post in the room, you make everybody better. Smalls up. Prairie dog. So chariot, same lesson, right? And I like this one. Let me find the picture that I posted behind your trade on this one. So guys, this is the exact same concept going the other way. Let me find the picture. You guys are so stinking smart. I love this classroom. So here we go. Area's not broken here, right? Now the area breaks. See the space between the bar and the zone? Resistance becomes support. There's the pullback to the area of support. There's the close on the correct side of the triggers. There's the market rocketing off to the promised land. Pretty cool, Chariot. But do you see how yours is the exact same lesson going the other direction? I love it. Guys, this is awesome. This is 2 in a row. 2 in a row with just the perfect lessons go in both directions. Nicely done. And then what happens is it builds that little bit of patience, Chariot, that little bit of patience to wait for the pullback, because when when resistance becomes support and the triggers are up and you have room to trouble, that close on the correct side is all you need to go north. Nicely done, man. Great lesson. Here we go, Wayne. I know it's Wayne because there's a dissertation on it. Trend is flat. And since it hasn't actually rolled, technically it's up. Room to trouble. Bar came through. So support, 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 support. And Wayne says, with odds favorable momentum, I'll just jump in. And look what happens. It starts to go down. And it starts to go down. This one closed below with momentum. That's his look. That's his jump in. That's his chili dog. Click sell at the previous bar. Gets in on that bar. Added in on the way down. The bar pulled back to the zone because when zones break, when support becomes resistance, it has a shot. Goes all the way to trouble. Look at that exit. 22.6. Oh, you got excited, right? Oh, took 100 off. Protecting yourself. Hit the trailing stop. Hit the initial stop on the first one. So, Wayne, are you with me? And guys, this is the exact same lesson again. Area's not broken. Look at the bounce. Took your money. Area breaks, pulls back. Look at the drop like a ton of bricks. Guys, this is one of the greatest lessons that we don't learn in the beginning. Until it's broken, if you're taking this trade, you're hoping. I don't care, Wayne. Respectfully, your winners don't pay my bills. Right? Guys, if you're jumping in down here, you got to be careful. Just watch it, right? It's a chart read lesson. Okay, your stop loss here got hit. You made it to your target. I'm not sure I would give any back. I like the second one. I'm on board with it 100%. The first one is hoping that it just runs. It doesn't. You had every reason because of the momentum. When it didn't, you have the wherewithal to jump back in and say, hey, look, it's just another trade. And it goes exactly where you would expect it to in a fraction of a second. And then it probably came up just as fast and didn't give you any time to move. Stops. It's great trading, Wayne. It's great trading. Jump the fudge in with trend and momentum. Momentum trade, 13 seconds, all targets hit. It's awesome. Remember, guys, it's not about the winners or the losers. It's about repeatable. Can you do the same thing every time? Can you create expectations for your trades? Can you say this is what wins more than it loses? And Wayne, I think without a doubt, the second one, those are all 100%. But this one, and guys, let me get Wayne's back here because it sounds like I didn't have it for a moment. If I'm going to jump the fudge in, I better have strong triggers on the small chart and be on the strong side on the large chart. Wayne knows that, and if you look at his chart, that's exactly what it was. Wayne says, I'm counting my advantages, and because of what I see, I'm willing to take this entry. Now, Wayne, would you take that same entry without momentum? Probably not. Would you take that same entry fighting triggers? Probably not. Wayne's done the study, guys. But if you're brand new, you think, well, I'll just jump in when it says down, right? I just want you to know there's so much more thought that goes into it. When you see people that are taking a little more advanced trades, it's not just to jump the fudge in, even though we put jump the fudge in. That's just a clever way of saying it. There's a lot of thought that goes into that trade. There's a lot of advantages that he's leaning on to take that trade. Termination, everything going up. Jump in before you hit something solid, Ron. Momentum and path. It's really not even momentum on the large chart yet, but it's the strong side of those small triggers from a termination. Nicely done. Who's this? Everything says down. There's your momentum trade. Let's make money. Down, clear, jump in, get out. It's just momentum and path. I don't have an entry. If this fails, do you guys see how... Oh, Pete, can I turn your chart into a lesson? Who are my jump the fudge inners in here? Who loves this one? OG, you loved it, right? Trina, I've seen you take them. Estefania, if you're in here. So I want you guys to see something. Once in a while, I typically don't take them. If the large chart has momentum and path, and I jump in based on those advantages, I can already create expectations if my momentum trade fails. What does that mean? So it means that if this trade right here fails, right? And that's the failure, getting up, losing the momentum, pushing up. Pete can say, with the large chart perfect, and I'm going to type it out, if I have rules met for a trend trade, that's the most likely scenario. Does that make sense, everybody? With momentum and path, if this fails and pushes up, it's likely to become a trend trade. So Pete says, I don't have any areas inside of triggers. I don't have trend trade rules met. I'm not going to hold this trade and hope that it turns into a trend trade. Is that about right, Pete? I don't have trend trade rules met. Why would I hold this trade? Why would I leave risk on this trade when the momentum is gone? Guys, that happens fast. If you're taking these jump the fudge in trades, they're quick profits. Momentum dies. If you don't have trend trade rules met, holding on to that trade, hoping, rarely works out. Great job. All right. VWAP midband, slow and lazy with down bias. Small triggers were up. All right. So Paul, what does down bias mean? How does that fit into your rules? In and out, Trina. That's it. Because it's magenta? I'm confused. Okay. It looks flat to me. So the colors are just a reflection of where the price is. So triggers, you said were down. Nope, small triggers were up. I like it. From 84, you had room to trouble, right? I think the bias came from you. No worries. So where do trend trades originate? I'm gonna write the rules down. Pull back to an area. The areas are zones, mid bands, one-to-ones. Guys, things that don't qualify, VWAPs aren't a zone, divergence, highs and lows, outer bands. It's a pretty specific list. So you didn't have an area to trade from. You were on the right side of the triggers, and it did go right to trouble, and then it died. And then you actually pulled back And that would have been your next entry right there. Good shot. You're getting it above the VWAP, and it just fails. And by the time you take the second entry, you just didn't really have room. And that would be that, did it break or did it prairie dog? It prairie dog. It comes down. First one, do you see how you didn't have an area? That's okay. That's an avoidable one. That one, all day long. All day long. Just didn't work. Just didn't work. If my triggers were up, if I had room, smaller up, I mean, your indicator said at least a retest. And it just didn't. I think the first one's avoidable. The second one fits a plan. And they just had different ideas as they came into the open. Odds favorable momentum. Lets the backup price clear trouble, because trouble is where decisions are made. Get in, make money, get out. ASAFP. Nicely done. We talked about yours, OG. Good stuff. All the momentum. Clear path. Jump in, get out. Ooh, jump in without momentum, and it retraces up even more. And Pete says, whew, dodged a bullet. Got that one. Hard to take a momentum trade without momentum, guys. Hard to take a momentum trade without momentum. Boaz, down. 3 triggers through. There it is, divergence. Second higher divergence, exit condition. Mistake did not go up until second divergence. So 2 things, Boaz. Pete, you deserve to get lucky every now and then. And I'm going to ask you, and you don't have to answer. Did it almost hit your entry right there? Did it almost get to that mid-band? And then when it started down, did you jump in thinking it was going without you? And then it did exactly what the rules suggested that it should? Yeah. Guys, we saw this one yesterday too, right? Sergio, I told you you're not alone. That's your entry spot. That's the oh no, it's going without me spot. What did it do? It added risk, right? It created more risk. And it created less management room when that second higher divergence prints. Because you knew about the second higher right there. That's almost a break-even trade, Boaz, instead of the losses that you took. And it all revolves around force them to give you your entry. Force them to give you your absolute best entry, guys. That's your right. That's a normal one, though. It really is. We've seen that a lot. And then, OG, we saw that one. Good stuff. Great large chart. Small chart gave you the opportunity to manage out of it. Let's see. I think we've got a couple more posted. Guys, if I missed any questions, let me know. Sometimes I do just as we go through. So if you asked a question in the room and I didn't catch it, will you repeat it or let me know? You won't trade from 9:30 to 11 on the NASDAQ, Boaz? I don't blame you. Guys, I'm pretty good at reading charts. I can't keep up with the NASDAQ after the open. I've tried. I can't. I would rather go to the S&P. Or if I'm on TradingView, they all move the same speed. So there it is again, right? Trend is down, strong trend, room to trouble, with odds favorable momentum. Jump in, hope it makes it. And it did. And Wayne, you do this really well. You're creating the TradingView chili dog. If everything is screaming down, Wayne says, I'll just go down with it and hope it breaks. And more often than not, it seems to. I can do anything, Sergio. Why? Do you think you see something? Never mind? You change? Change your mind? It says down. It says strong triggers. It says I don't have an area inside of triggers. Is that what you see? That mid band's right at the top, which means it'll be right at the top if I get a pullback. With all that momentum, right? If that mid band comes down a couple ticks below it, that would fit the rules. Is that what you're seeing, Sergio? First it's momentum, then it's path. Notice that my divergence isn't printing anymore. If I get a pullback, it needs to be an area inside of triggers. It needs to happen before I hit the blue line. It was slow and then it went down very quick. Have you guys, did everyone check the news today? Have you noticed that Ron keeps saying FOMC, FOMC, FOMC? If you've never witnessed FOMC, guys, this is the biggest announcement of the month. The market will go like a rabid weasel on meth for about 2 hours typically. And what's happening is they're going to talk about the fund rates, the economic projections. They're going to give their statement, and everybody with a metric crap ton of money is going to jockey for position to be there when that statement is made. Notice that the market isn't trending. How do you take trend trades without a trending market, right? Guys, FOMC is a beautiful opportunity to play on simulator. FOMC, in my opinion, is one of the most difficult days to trade ever. Because the market typically doesn't do what the market typically does. All right, triggers rolled. They sure did. Waited until all triggers were down. Got your first target, next stop to break even. All right, Adam, are you familiar with the gap theory? The idea that if these synthetic triggers are way up here and you hit a mid-band, it's likely to close the gap to those triggers. Your entry, if you're going to take it, is really late. Your large triggers are up. None of your triggers have broken through one-to-ones. You've reached a mid-band. You can see it right there. You just didn't have anywhere to go. I'm glad you got paid on the first one. Glad you got paid on the first one. There is so much trouble on the large chart. Momentum hadn't developed yet. The mid-band's a termination. A lot of reasons. Bad top. I love that you got paid. That's one of the things that the NASDAQ will do for you guys sometimes. It moves so much, you can take a little something out of nothing. Now we're getting pretty, right? Good triggers, all the momentum. Mid-band's not a concern anymore. Room to targets. Pulls back to the area inside of triggers. Stop a little early on the reversal bar, still in the retracement zone. And you did get stopped out. You did get stopped out. What time was that? 7:48? What happened after? I'm going to open up mine. I'm going to open up my NASDAQ so we can look and see what happened after. I want to see if there's context clues in there. Oh, that was yesterday's replay. Divergence from a one-to-one. Let's see. Oh, we can see what happened. Pulled back to the one-to-ones. All the triggers went down. There it is right there. There was your entry. There was your exit. All makes sense. I love the trade, Adam. They just wanted to push higher. And they did. And then they come down. And then they retest. And then they come down. And then there's your pullback to the area inside of triggers. Right at those synthetics. Stops are tight. I love that it hit both targets. How are you choosing stops? Reversal bar up. Is it not worth the 5 or 6 ticks to get above the reversal bar? Were you in the room for the point where we talked about the buyers tried and failed? That's what that pivot high represents. being behind their failure point typically works out better than a reversal bar, especially on the NASDAQ, because look what the NASDAQ does. There's so many little fluctuations in there. It's easy to get popped if you're in the wrong spot. That would qualify as the wrong spot. Does that make sense? That's the I don't want to lose stop, not the I'm going to put it where the market shouldn't go stop. And I like that it didn't get hit. And I like that you made money. Possible divergence. Well, can we talk about why people do that? And I'm not saying you specifically because I won't presume to know what's going on in your mind, Adam. People take a bunch of $100 trades because they're scared to lose. That's the biggest reason. People take small profits because they're scared to lose, because they're afraid to give some back, which means one of two things. It means one, you're the best manager ever and you're taking risky trades with a lot of fluctuations, or that you don't trust. You just don't trust the plan to keep your stop in place. You're not willing to give it back. Triggers are up. They are strong. There's your pullback to the area. Not even in the triggers yet, right? Not even in the triggers yet. You do get out of trouble, break even into trouble. That's where break even is appropriate. Directly into trouble, getting paid at it. And this is one of those things. You see 1, 2, 3 fibs. You don't see it on this chart because you don't have the synthetics. But man, there's just a roadblock there. There's so many things against this trade. Great job. That's good management. That is management that makes sense. Get paid quick, get to break even. There's a lot that could go wrong there. Nicely done, Adam. Does that make sense? Triggers down. I love it. Strong triggers. I love it. Pull back to the area inside of triggers. I love it. First profits. Love it. Did it keep going down from there? At least to 607? After it got you break even, plus a tick, do you remember? Did it continue down? Yeah, it sure looks like it would. And Adam, here's the cool thing. Here's the cool thing. I'm going to tell you there's the opportunity for more money. If you make $100 a trade, and you do that 5 times a day, that's going to cover the commissions. So you're making $450 a day. You're $100,000 plus. Is it bad to take $100? I don't think so. I love getting paid. Break even, if that makes you comfortable, take the break even. It either runs or it doesn't, right, Adam? The key is that you're taking the right entries, because the right entries are more likely to lose than they are to win. This would kill my brother. John Novak would call me a cat over and over. Well, the KISS plan, Adam, is designed not for the NASDAQ. The KISS plan is designed for a rational market that doesn't have a ton of overrun, that doesn't move 10 times faster, and you have to have a 13.2 for entry and a 34.5 just to slow it down and make it tradable. The NASDAQ is not a rookie's arena at all. NASDAQ is psychotic on Renko bars. It's fast, it's difficult, and it does overrun a lot. Hey, look, your long trade, it did go. That's okay, though. Break even. You need to go back, Adam, and start looking at how many times your break even gets hit. What were the conditions? Was there room to trouble? And did break even make sense? That would be your next growing point. But the cool thing is, Adam, is you're willing to get paid. So until you develop that perfect management plan, you're still putting money in the bank. That's important. Nice job. I think trust is one of the hardest things. What's the expectation of my trade? Ron says when I have termination conditions, when none of the triggers are through, when I get multiple divergences, the expectation is that the market will typically push down just above the reversible marker. Counter trend trade, white bar, really shouldn't work trade, not even close to high probability trend trade, but it wins more than it loses. With this look, price tends to return to the reversal bar. Had to get in with a zillion divergences, simulated base hit. If you haven't learned the high probability trend trade, please only take this trade on simulator. Don't do what Ron does. Ron spent a year putting pictures in the room, asking questions, building a plan, proving that it wins more than it loses. 82% winners. Adam, nice job. 82% winners. Taking small profits right now. So what happens, Adam, when your management plan grows? This is brilliant. Can I do this? Adam, can I send you away from this room feeling really good? The goal of trading is to get paid. To take the trades that you have proven to yourself win more than they lose. You will grow. You will grow. But Adam, what you're doing right now is you're learning how to put money in the account, protect your investment, take the right trades. Adam, is there any doubt in your mind that 6 months from now your management plan may be a little different? That 6 months from now you may hold for bigger moves? 6 months from now you might just add $50 a trade. And it's all going to grow. You're learning how to get paid right now. And I think it's brilliant. I think it's brilliant. I think it's one of the most important things you can teach yourself. Base hits pay bills. Triggers down. 3 triggers through. All right. Pull back into the zone just below. All right. Ray gun. Did it almost hit your entry and start down? And you said, whoa, it's going without me? It's like looking in a mirror. So here's the challenge. I won't even call it a challenge. Are you ready? You're going to love this. Or you're going to hate it. I don't know. But it's going to be a good lesson for you. It's going to be a good lesson for everybody. You are the man of the hour for giving this lesson to the peeps. You ready? Da, 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 da. If the perfect trade is momentum, clear path, and entry. We did this yesterday. I'm going to tell you guys right now. I don't think you would be mad if you printed this out and took 3 pieces of paper so you could cover whatever's missing. So, Justin, can we agree that momentum was good? Smalls below, separation, all the colors match. You could argue that in a court of law and nobody could tell you that you didn't have momentum on this trade. Yes. Hey, Ron, have a good one, man. Thanks for being here. I appreciate you. Ron says it's FOMC day. I'm going to swing golf clubs and chase bikinis. Nice job. And then, Justin, we could also agree in no uncertain terms that you were able to find the perfect entry. Areas inside of triggers. You with me so far? Love it. So I want to do this. And let me know what you think about this. With only 3 triggers through, I know from the brilliance of the classroom and study materials presented by the best teacher ever. I'm just being stupid, guys. That this is only potential. And my path is not clear yet. Can we agree that you don't have a clear path? Let's get rid of all that nonsense. Cool. It makes sense to really lean on those other two advantages if one is missing. So here's where, Justin, and let me tell you, man, I like your large chart read. What is divergence? Do you remember? What does divergence mean, everybody? And it doesn't matter which platform you're on, divergence is divergence. And divergence is a loss of momentum. Does that make sense? So every time I see one of these little blue lines, I know that I'm losing momentum. Fair enough. I like your trade. You're taking a shot at the break, right? One divergence, Justin, can kill the party 100%. But if you're going to take the shot, that's cool. No worries. Take the shot. The moment that second divergence prints, dude, you have really let go of the momentum advantage. You already don't have a clear path. So that second divergence can be an exit. It's just a management opportunity. And what you're saying is, because it's not the perfect trade, I'm going to manage a little more assertively. I'm going to let my small chart that shows change I can't see on the large chart let me know if things aren't working. And from this entry right here, I don't know how many contracts you're trading. I would get paid. I would get money in the bank, at least on half of my contracts, and get to a zero loss level ASAFP. Does that make sense? Great chart read. The large chart is everything you could hope to look for the entry. It's even coming from a strong top. Yeah, but that's cool because now, Justin, you probably will, right? Now the next time you take one of those potential to breaks, you're going to be like, oh, I know I got to look for those divergences. I don't want Mark to do that again. Great trade, dude. Great job. Great opportunity for management. And just a heads up, your stop does make sense on the perfect trend trade. So you do understand that. $100 trades or 100 trades, Z-Robot? You're welcome, Justin. Good stuff, man. Really good stuff. You're taking $100 a pop, Z-Robot? Or 100 trades taken? 100 trades taken. I like this. Figuring it out, win a little, lose a little, win a little, lose a little. Figuring it out. Uh-oh, got cocky. Broke my rules. Right around trade 24, said, wait a minute, the rules work. Oh, yeah, another 18 trades. That one didn't work. I'm still going to follow it. I'm amazing. Children sing songs about me. I'm cocky again. Dang it. Now I got to go through believing I'm smarter than the checklist. And right around trade 54, you said, you know what? My checklist works. I'm going to commit. That is the most real graph of the trading journey that I've ever seen. Figuring it out, think I have it figured out, get cocky, and then believe it. Nicely done, Z-Robot. Nicely done. Pete, all the momentum. Getting in on the way up. Getting out of trouble. No reason to exit. Hold that momentum on the small chart with the large chart. Pablo, I missed yours somewhere in there. I'm sorry. Is this the same one? My bad. All right. Triggers down, strong side, room to trouble. Pull back to the area, close on the correct side of the small triggers, out at the outer band. Can anybody find something wrong with this trade? Pablo, it's perfect. Was it easy? Was it a little less stressful? It's crazy, right? That's okay. You just saw it. Z Robot just reminded you that you're human, that you're going to get a little cocky, that you're going to believe you're smarter than the plan. Guys, the reason we give the plan is because the plan works. The plan works. Everything is down. Pull back to the area. Close below. And they just did you dirty, Paul. They just did you dirty. Let's see where you got in. 86. Man, Paul, it's the perfect trend trade. But they wanted to go higher, right? But they wanted to go higher. Entry pullback out at 85. Done at 89. 89 is still in that zone. How did you pick 89 as your stop? I would say at least let it get above the zone. Like if you're not going to use the pivot high, I would say at least let the zone protect you. Maybe 92. Does that make sense? And man, Paul, this is the perfect trade. Your trade is every bit as pretty as this trade. 100%. The only difference is that your first trade didn't work. Now, they didn't give you the best entry for the second trade. Since potential bottom, I like that. You saw that it was aggressive. I love it. I can't get mad about that trade. I don't get mad, but all right. Down, weak side, pull back to the area, close below, get in, go to trouble. Claire, what was the only challenge? What's the only thing not mentioned on this chart? You thought you were making it safe by getting in below the zone, right? Zone's not broken. It's just below it. If I'm going to make that choice, might as well just trade into it. I mean, it gets below it. As long as you realize that it's not broken yet. You are trading into an area, even if you're a couple ticks below. No different than getting in right here, believing that it's going to break. Does that make sense, Claire? No different than going long right here, believing that it's going to break. And it doesn't mean that it's wrong. I can't stress that enough. I want you to know what you're up against so you know how to manage it. That's it. That's all. Like your grandmother, right? Kind of playing goalie in front of a hot stove. This is the thing that could hurt you. I want to make sure you know about it. I want you to make good decisions with it. But ultimately, you have to make your decisions. I don't disagree with it. Room to trouble, you're good. Nicely done. You guys are so stinking smart. You know that? Oh, that's NASDAQ. Why did I pull NASDAQ back up? Oops. Why did I pull another NASDAQ back up? Oh, that's John's. Take and manage. I love it. Your mom just let you go for it. Tried one too many times. Like, all right, grab it. Yeah. We've all done it. It's terrifying as a parent. I'm going to let you know that. You'll know one day, Morgan. It's terrifying as a parent. This is the S&P. Didn't quite make it, did it? Oh, that was your trade. That was that one that we talked about, right? Ooh, let me see something. Who was that? Who was I talking to there? Justin? That's the one, right? What time zone are you in? All right, so you're an hour behind me. Are you in Mountain, Justin? Time zone? One of the things that happens if and it doesn't affect anything, it's different looks. Your charts look like they're an hour behind mine. Oh, you would be in Central. Central time zone? Sorry. Mine are Eastern. Mine said absolutely no more shorts. Yours said that it had a short. That's okay. But if you ever wonder why our charts don't line up, it's because we're in different time zones. Good separation, momentum. Only 3 triggers through. Was it 3 triggers through, Estefania? You're going to be so mad at me. It's only 2 triggers through, right? Guys, when you're doing the math on whether it is broken or clear, you've got to use the lowest point that's been reached. You can't use the highest point. You got to use the lowest point. So, Estefania, it's 2 triggers through. Does that make sense? It's all the momentum. It's the perfect entry. It's no divergence. It's strong triggers. It's out at trouble. Well, not even out at trouble. And then the second one runs. So, Estefania, the only coaching I can give is that it's not 3, it's only 2. Perfect entry. Perfect entry. What got you out before a bar even formed? It started to go up too fast and divergence did print. Well, didn't print? Where did you need divergence? No divergence is great. You never even gave the trade a chance to even get to trouble. 42, 25, 41. So you paid for commissions on the first one and then held the second one. I like the second exit. That's nice. Go for the next trade. Little skittish. Little skittish. Have a reason to exit, right? Didn't give you another trend trade. Now it's a couple triggers through. Divergence. Choose not to take it. I like that. That one was trend trade all day long. It's that first contract off. Do you see how one of the things you can do, and we'll just do it, and then I need to take a second. So you've identified the area you hope breaks with all that momentum. That's your first target. When you talk about the 50-50 trade, that first area, that area where I'm saying, I sure hope this breaks, that's your first sign of trouble. That's an awesome place to take first profits, then to get to break even. And remember that your whole expectation, Estefania, is with these advantages, that area is more likely to break. Let it get to it. And then great hold on the second one. Does that make sense? It's a little different. It's not like just $100. It's okay. That's trouble. I'll get out of trouble. Good stuff. You guys are amazing. Divergence on only the potential to break. Oh, you did the 100? Then perfect. And look at it going beyond the areas. Do you guys see it? Even with 3 triggers through, divergence is the biggest killer of these trades. And then OG, price is reaching a mid-band and resistance. Large triggers are below the reversal bar marker. We'll see if they come back and close that gap. Guys, I'll be back in about 5 minutes and then we will finish strong. We skipped the first break, huh? So let's follow the KISS plans. What do you say? If we have strong triggers, no terminations, and an area for entry, let's pull the trigger, right? If we have 3 triggers through from a strong top or bottom, no divergence, let's pull the trigger. If we have room to targets, let's pull the trigger. You guys cool with that? Let's have some fun today. We got an hour. We got 40 minutes. Odds favorable momentum, strong triggers. Rule number 1 is met. Price has reached Fibonacci resistance. None of the triggers are broken. I don't have a clear path, therefore, don't care what happens next. Triggers are down. Price is on the weak side. I know how to manage. There's my pullback to the area. What do I need? I need a close on the correct side of the triggers. And I would have almost $200 worth of profits if it happens. Does that make sense, everybody? First, it's down. Lets me know which direction to trade. Then it's weak. Lets me know how I'm going to manage it. And I have to have room to that. At least $100 from a close on the correct side of the triggers. If the close on the correct side of the triggers doesn't give me the ability to make at least $100, guys, my plan says it's not my trade. Don't want it, don't need it, don't have to. Can't make me. If I get a close on the correct side of the triggers with room to that trouble, I'll take the trade because it fits the plan, because I'm on simulator, because I'm going to look at everything after and see what I did well, what I did wrong, what was good, what was bad. Do you guys notice smalls above the large, space between? It's odds favorable, momentum up from the weak side after a termination. Got to be aware. There's my pivot high at 08. I know where my stop goes if I get my entry. I have 15 seconds. I have 15 seconds. 6 seconds. Nope. Now price is breaking above the area, right? Resistance becomes support. Yeah, weak side. The immediate momentum is up. Now it's broken above it. I'm not really trading from that area anymore, am I? Now it has to be the next area, which puts me in trouble here. So I just sit still. Sitting still is hard, guys. Always has been. Sitting still is difficult. Sure pays dividends, though. What would you guys like to talk about? I've got some new names in here. Richie Rich, loved watching you as a kid. Who else is new in here? Cheetah, good to see you back. Long time no see. What can I help you with, guys? What's your focus? What do you need? Claire remembers that cartoon. Claire, we may get AARP cards at the same time. What's killing you? What's hurting you? What's making trading hard, guys? Let me help. I love to help. I can't help if you don't let me. We've gone through all the pictures. We've done the live chart reads. Nothing to do now but answer your questions or mute the microphone and just say nothing while we watch the market and wait for something to set up. Did you guys know that 90% of your day is doing nothing? 90% of your day is sitting on your hands. 90% of your day is being patient. 90%. That feels like a long time, doesn't it? Doing nothing's what's killing you. Me too, Sergio. I get bored. I get bored. If I get bored, I literally have to stand up and walk away, because if I don't, I'll take stupid trades. I know I will. I finally figured that out about myself. Guys, even a close below is not from an area now. Do you guys see that? My rules say that I need a close below from an area. What happens to resistance when it breaks? It's support, right? When resistance breaks, it becomes support. A close below would be directly into support. That breaks rule number 2. Oh, look at that. They're not giving it up anyway. Losing momentum. Only 3 triggers through. No separation between the small and large. Not a strong bottom. Just doesn't fit my plan. Which means I have to wait. Guys, did I mention that it's FOMC day? That the market may not work the way you want it to work today, that they could be a little bouncy, little jumpy, little nonsensical. This is a great day to get a tea time. Unless you're one of those poor folks that live where it snows, then probably not a tea time for you. Directly into a VWAP, zones, nothing to do. Divergence high, weak triggers, nothing to do. Everyone always says, Mark, if you would just trade live, I could become a great trader. If you would just trade live for us, I could master this stuff. It's not going to do any good. 90% of my day is doing nothing. Yeah, Boaz, you even said you wouldn't trade between the open and 11. I just can't teach that in class. It's too fast. 90% of your day, guys, doing nothing. Miss Trina, were you just waiting for downtime? I love it. Appreciate you. Trend is up. Strong side of the triggers. Room to trouble. Pulls back to the area. Closes above. Just missed your target. Got stopped out. Why should you have gotten out at the HVA, Trina? What does the HVA mean to you there? Now I could say get out at the close below small triggers when it just missed your target by a tick. It's the perfect trade. It made sense. That HVA means nothing. It's still support, right? It's still support. I love the commitment. I think it's the perfect trade that didn't work. Is that the same one? That's the same picture. Your second picture is the same as your first. I was going to try momentum here, but chickened out. So from 46, what was your area for momentum, Trina? From 46, or from 47, what was your area? This is a good lesson. You ready? Your area was what? Well, your entry was right here. Your area was right here. Do you see the difference? This is okay. Okay doesn't mean yes. That's okay. We're going to talk about it. Well, let's talk expectations. What is a momentum trade? A momentum trade is saying, with strong triggers, I expect the retest of an area to hold, and the market will continue in the direction of said momentum. Does that make sense? So what's my expectation? With all of this momentum, when an area breaks, I expect it to pull back, and then I'm looking for continuation. So this is your expectation. So what's missing from yours? The first one is no pullback for retest. Does that make sense? And if you waited for the pullback for retest, You're in at 42.75 instead of 47. That's $100 difference, $100 less risk, $100 more profit potential. Your initial stop goes about 4 ticks below that zone. So what this is I hope momentum pushes me. I'm not trading from an area. I'm just hoping momentum pushes. One of the ideas on the momentum style entry, Trina, is that you've broken an area. You've broken it, and now you're pulling back to it. And that's the one. So if I jump in here thinking momentum is going to fix me, very often they do the pullback because, and I like this, let's just go find a real world example. Here's a good example of exactly how it works. The sellers are in control. They're going, they're having fun, they're good. This is the key area, right? That's the key area where if the buyers are going to fight, typically that's where it's going to come from. Well, sometimes they don't, and the sellers remain in control, and you don't get a fight from the middle until the middle of nowhere. And maybe this is where profits are being taken. Maybe this is where there's some buyers looking to get in, or even more importantly, this is where the sellers say, wait a minute, let's get back to that key area, add on to our position, and then continue down with all that momentum that we created. That pullback to the area is genius, because when support breaks, it becomes resistance. And look at how precise that look can be. So on these momentum trades, we create this, well, if I just wait for it to go down, it increases the likelihood of success. The reality is getting in right at where they're most likely to fail gives you the absolute least amount of risk. Does that make sense? I like the thought process. You just jumped the gun a little bit. And look at that. The momentum trade worked beautifully. Worked beautifully. It's scary buying it on the way down, but you had the reasons. Good stuff. Great chart. Really good lessons there. You thought it did pull back? Okay. I believe you 100%. Do you see how it didn't, though? Going back without the pressure of entry or management or anything like that, can you see how it never made it back to the area? When I'm taking a momentum style trade, Trina, I'm literally looking over here where that zone and that number line up, and I'm waiting for it with a limit order. It's the only trade that you'll use a limit order on. It's not buy now, it's not sell now. It's literally a limit order right there saying, come get me, mother scratchers. Good stuff. Triggers up, room to trouble, pull back to the area, close above, great entry, and they make it to trouble. Was trying to do split targets, but forgot correct contract number. Tried to do it while in a trade, didn't work. Anyway, still made the target. Nicely done. Nicely done. Yeah, you were trying to split it. You only had one left over. It's a perfect trade though, Trina. 100%. That is the perfect trend trade. That's the easy trend trade. That's the one that makes life effortless. Good indication we're not going up anymore. Amen. At least not in the moment. I like this picture. I'm not going to take a trade. I'm going to say I got no trade to take. Beautiful. Triggers are down, strong side, room to trouble. There's my pullback to the area. I see a long in there. There's the close below. First target, trailing stop for profit. Nicely done. Sometimes they give those big ugly bars, make it hard to manage. Strong trigger. Oh, that's just the HVA. We're good there. Nicely done. What was the long? Did we see that one? Pull back to the area. Close above at 21. There's your close above. Get in. Make money. 2 days ago. No worries. Great trading. And great lesson on the momentum trade there. So now next time you look for a momentum trade, you got just a little more to work with. Pete, all the momentum, room to trouble, didn't take the trend trade. And then you said, I'll just ride the momentum down. Nicely done, Pete. Nicely done. Pete says, I don't always have to be in. I know where that's most likely to go. I'll just make some money on the way down. You're boring. You are a vanilla trader. What a great way to be. Take all the stress, right? Boring is good. Boring creates great traders. Those of you that are good at sitting still, not trading, look at that. The gap theory didn't happen. Those of you that can do nothing when there's nothing to do, good stuff. Good stuff. All right, what do we want to talk about, guys? Sergio, I just sent you a message. Triggers are up. Room to trouble. This resistance has become support. It already pulled back to it with no room to trouble. Didn't have room to take a trade. Sometimes that's how it is, right? Wouldn't it be awesome if this resistance held, if the market pulled back to this area that is now support, even though it's red, and then somewhere right here above that VWAP, we get the perfect close above small triggers with room to trouble? Oh, I know exactly what I'm looking for before I ever get there. What's up, Better Dad? Good to see ya. What can I do for you guys? How can I help you? It's funny. This is the only profession where the coach has to beg the class, please let me help you. Please let me teach you direction. Please let me remind you that the VWAP is problematic. You can't take a trade into it. Waiting for a pullback right to an area. F5, Trina. Just hit F5. Click on your screen, hit F5, it'll reload. Very often that fixes it up for you. What is orb, Justin? Help me out. Is that an instrument or is that a platform? I'm not familiar with it. What is that? Is that an indicator? No, I don't. We don't have an ORB indicator. Open range break. Is that like the first bar of the day? Is that the first bar that breaks a range? Hold on. Oh, hold on, Justin. Watch this. There's your range. There's where it broke. First 15-minute bar. What makes it first? Midnight? Open? What makes it first? Open? So at 9:30 a.m. in the NASDAQ, that's it. There's your open bar. What's it tell you? Tells you the triggers are down. Depending on where you are, there was plenty of room. How would you use it? This is cool for me. I love learning stuff. How would you use it? What does that bar tell you? This is me becoming the student. I wish I could just give you the microphone. How does this 115-minute bar give you an edge? How does it create a scenario that creates an advantage? There may be a way. I don't know what it is. And you don't have to type it all out. If you ever want to talk about it, let me know. I'd love to. One of the things that I've realized, Justin, and man, it's just me. And I'm not suggesting that what is right for me is right for anyone else. I find that for most traders that are struggling with consistency, less is more. And the more indicators you put on a chart, the more opinions new traders tend to make. So there used to be where John would give you the workspaces, and it may still be, with a range chart. So you have your Renko charts that say, here's momentum, right? There's path. Here's your entry rules. And people are like, well, yeah, I know this wins 70 to 80% of the time. I know that this is going to create confidence through that memory of success. I know that this is the best trade, that this is the trade that gives me the highest chance, the trade with the perfectly defined entry, the one that says everything is perfect, just take the damn trade. But what if, Mark, just hear me out. What if I added a BOP, right? And what if I added a CCI? And then what if I put an EMA in there? And then what if I added the MACDs? And what if my mama showed up to the party? And what if I had a money flow oscillator? Well, then I would know exactly what's going on the market. Then I would know everything. And there would never be a freaking tick that got by me. Right? Does any of this undo the idea that with momentum and path, potential to break, you had the perfect entry with the easy win all the way down to Fibonacci support? Does any of this play into it? I feel like it doesn't. I feel like it's a bunch of noise that makes us feel good, right? Whoever bought the car because it had the most accessories? Well, this one's got a chiller that makes ice. So if one day I wake up and decide that I need a martini on the side of the road, I'm good, right? And it never gets used. Guys, I've got 110 output jacks in the back of my Subaru. I don't even know where they're at. I would have to stumble upon them. Because the reality is, with momentum, with path, that's all I need. And Justin, I'm not trying to talk you out of adding indicators. But if you know that you don't have momentum and you know that there's shit in the way, is there any other indicator that's going to protect you from this mess? Probably not. And I love that you asked. And I love, and guys, there's some of you that do great things with indicators I've never heard of. So I'm not for a moment suggesting that they don't have value. Please understand that. But a lot of times you guys come to Nexgen with the baggage of your exes, right? I dated these other indicators for 3 years. She cheated on me every chance she got. She stole my dog, slashed my tires, kicked in my headlights, but I know how to kiss her. So I really need her to be a part of this plan, even though she's not necessary. I need to compare my new girlfriend to her and try to make her into what my old one was or didn't give me, right? And that's probably a horrible analogy, but that happens a lot. They don't come with spare tires. What doesn't come with spare tires? My Subaru has a spare tire. I think it does. It better. There you go. I don't have any idea. I could be wrong. Girlfriends don't come with spare tires. Not typically. Not typically. So, Justin, I'm sorry. That was a little bit of a tangent, right? My apologies for that. If you can, so this is what I tell people. If there's an indicator that you're comfortable with, yeah, I will, Sergio. If there's a an indicator that you really like, right? Like I love MACDs. I remember MACDs from Nexgen 20 years ago. You needed them to take trend trades. Well, John just auto wrote the MACDs in. I don't need them anymore, so I don't ever look at them. But if you're like, man, what is an indicator that I think would help me with my advantage? Just write a plan that uses it. And if you can't come up with a reason that it makes it better, do you need it? I used to ask people, do you really need a 21 chart to take a trend trade? And they're like, well, no. But you know, it lets me know when there's a lot of momentum on the 21. I'm like, so you'll break your rules because of 21 momentum? And everybody in the room goes, ah, dag nabbit, I will. I will break my rules because I've added an indicator that doesn't add, but rather it detracts, it distracts. So, but that's trading, right? Trading's like dating. You got to figure out what works for you. I know I like girls. I'll start there. I'll try brunettes and blondes and redheads. And we'll see which one needs to be married to me. Turns out it's brunettes. There's a tangent, huh? We're still waiting, right? We've called our shot. We know where it needs to come from. How long have we been waiting for them to push down? And when they get there, that VWAP's in the way. That's my problem spot. That's my problem spot. And Justin, I hope that didn't sound like I thought it didn't have any value. I just, I don't know the indicator or what value it would bring. Doesn't mean that there's not. Hey, look. Does anyone ever feel like they have a crystal ball? This is exactly what I need to see. Let's see if it happens. Paul, what'd you do? Pull back to the area, close above. No room whatsoever. You had about 6 ticks to get to trouble. It got to trouble. And then it retraced all the way back off of trouble. And thank goodness they decided to retest it, right? They decided to keep it test. They decided to retest it. Trying to trade long, pull back into area, close above strings. No dang room. I agree. No dang rule. Hoping momentum will push it to the zone. You took a calculated, a little bit of hope. But Paul, I like your entry. Your entry makes sense. Everything about it. And once you get the entries down, everything starts to sort itself out, I think. Keep it simple, stupid. I like MACD too. I think trading price action and momentum is best for futures. I just think, and this is just me, Justin, and I'm going to tell you guys right now, wow, look at that. I don't have very much experience outside of next gen indicators. So I'm probably very biased. And it's a bias created through ignorance. But I've been teaching people to do this coming up on 6 years. And the one constant in 6 years, and I say this without hesitation, the one thing that has been magnificently consistent is that the students I teach do better with fewer moving parts. That people tend to find more profits with less to think about. And that's just my experience. And I think that when you have 3 rules on 2 charts, it's hard to make it much easier than that. All right, if we got to close above small triggers, what's our problem? Do I have room on the large chart? What do you guys think? I think no. Not enough room to make money. That alone, from right here, Paul, where a close on the correct side is, from 28 to 32, I've got $80 worth of potential profit. That's it. Is that your trade? If it is, by all means. If that's your trade, rock star that stuff. Take and manage. It's not mine. I'm not allowed to take it. It's tight. And not only is it tight, it's odds favorable, momentum against me. So these are the things that I start looking at. Do I want to fight the strongest trigger look ever with no room to work? Hey, Trina, wouldn't that almost look like a momentum style trade short if it pulled back to the VWAP with all that momentum? It almost looks like it would fit the rules. I mean, it doesn't quite, but don't thoughts like that start to enter your brain? They do mine. It's in a zone on the large, right? A close above is a trend trade. Down bar, still not rules met. Still not rules met. With the bar far away from this trigger? No. But now I'm in a zone. I don't have a trade. I have to get back above the zone to be clear of that trouble. And once I get clear of that trouble, I'm right into the next trouble. Does that make sense? Guys, your rules, you never even got to close above. It's freaking amazing. It's amazing. We're still in that mid-band area. The triggers are still up. Trina, there's your break below. That support's now resistance. Ugh. We're below trouble. If you were a momentum trader, did you know that you could make a case for selling the pullback to that HVA and zone with all this momentum? And you could say if they push above that zone, well, it's not my trade anymore. But what are you doing? You are fighting the triggers over here. But Trina, that's what a momentum style entry is going to look like for you. With momentum, with the break, with the pullback, I'm hoping this zone holds. And if they get above it, guess what? It didn't hold. Pretty cool, right? Hasn't lost momentum yet. And since it's just momentum, and it fights the large chart, but do you see how getting in on the pullback, it at least gives you a fighting chance? It at least gives you a fighting chance. And if you commit to it, you got to commit to it. These are going to bounce and scare the hell out of you. The problem is, Trina, is it doesn't really fit the rules because I don't have a clear path, because I'm fighting direction, right? It's not anything that I teach. It might work, But that's how you take a momentum style entry. No, if it goes beyond the zone, let's change the language. With all that momentum, I won't even say expect. I hope that zone holds to the downside, right? If they get above that zone, well, it did not hold to the downside. I'll exit. That's all it is. That's the whole management on it. I expect that zone to hold with all this momentum. If they get back above it, it didn't hold. The reality is, we're looking at a trend trade because the large chart says up. A close right there doesn't give me any room at all to the VWAP. None whatsoever. But why don't we take that momentum trade short, Trina? Because the large chart says up. The large chart says up. But if those were down and screaming, well, so Justin, when you say that, what does the large chart say? It says up, right? The problem is it's got nowhere to go. Strong side. It just doesn't have anywhere to go. Your stop would have to be all the way down here, trading into trouble. What's the large chart target? Midband, right? So every time I get to something solid, I got to say, oh my gosh, I hope that doesn't hold. But do you see how the large chart set up? And watch that. We'll just take 80 bucks on it. But there's just nowhere to go. But that's what your trend trade looks like. Pull back to the area, close on the correct side of the small triggers. Expectation is the large chart target with the strong side of the triggers. The problem is it wasn't a clear path. I can't stress that enough, guys. It was not a clear path. This is where Claire would tell you, take and manage. Take and manage. Everything says up. You've got a line in the way. Take and manage. Does it fit the KISS plan? Not yet. But that's one of the examples that you guys will see in the room a lot. Take and manage. What does the large chart say? Now the large chart says we're up. We're on the strong side. We're above trouble. There's no reason to believe it's not going to go. If you're going to jump in up here, your risk is huge. You may as well just trade into the area and hope it breaks. Or wait. Maybe you want to get paid at the first sign of trouble. There's an area that could create a bounce. It hit it and then didn't fill it. But the whole goal is to make money, right? The whole goal is to go with the large chart because the large chart is in control. The whole goal is to have room because we're here to get paid. The whole goal is to not fight the small triggers because you lose that more often than you don't. This resistance is now support. Who knows? Maybe it'll pull back again. Maybe it'll come get us. I don't know. Maybe I just take my $1,000 directly into trouble and say something clever like, you know what? We hit trouble. I'll lock in 360. It either runs or it doesn't because my job is to get paid. Small chart trouble from the strong side of the triggers is more likely to break. It's not guaranteed to break. Why on earth would I give back $360? Does that make sense, guys? This rule broke entries, but because of the up, because of the strong, I took a chance. It worked out. The worst I can do here, guys, that's 29 to 43. That's 14 points to the small chart trouble. You'll get to the point to where you start doing things like this. Some of you are saying, Mark broke the rules. Mark did break the rules. Mark traded directly into trouble. Why? because this is support, because these are up, because I'm on the strong side, because it was the perfect pullback, because I'm not fighting small triggers, because I had about 50 bucks to get there. And if something drastic happened right in this zone, I'd exit. But it's fulfilling trend trade expectations. Another up bar, another HVA. Okay, if it can't break this zone, if this zone holds, I'm going to get out. If they don't come get me, I'm going to the mid band. Does that make sense? Did anyone ever feel bad about $550 in a trade after you already put 500 something in? So Trina, do you see the logic here? If they come back below this zone, that zone's probably not breaking, right? I don't need to stop all the way down here to break even to know that zone's not breaking. But if they keep moving, keep grooving, shake it off, baby. Little Taylor Swift. Let's go to the mid band. Come on, you can do it. You can do it. Now I want this area to break. If they get below that area, they can have my money. And if they don't, I'm getting paid more. Pretty cool, right? Guys, I don't tell you when to trade or how to trade. I tell you, start thinking about advantages. Start understanding where the market shouldn't go. Start understanding where the fights are most likely to fail, where the fights are most likely to happen, and take the very core advantages, momentum and path, right? Create a plan that suits your needs. If they get below that zone, Trina, I don't want it, but until they do, I'm holding this trade with all that momentum. Does that make sense? Yes. Go. Come on, buyers. Everybody do the up dance. Hell, we could even say, let's see if they get to the zone. But when they get to the mid band, I'll manage. If they get to the mid band and I get a close below small triggers, I'll manage. But now we're getting to the wrong side of that momentum indicator. I wouldn't be surprised to get stopped out. But I'm not just going to throw myself in front of the market. They're going to have to come get me. They're going to have to break below that zone. And if they don't, well, let's just make more money. And if they do, let's sit on the 1,100, 1,200 we made on a 4 lot. Let's go swing golf clubs. Remember, guys, there's a million ways to use the software. Trading with the large chart produces the easiest trades. Letting an area break produces the easiest trades. It's not the only way to do it. It's the best way. And it teaches you to make decisions outside of the best way. It teaches you to find the next level. Does anything say down yet? Not yet, right? And here's an even better question. If those small triggers roll, if they push through our stop, Trina, don't you just have another trend trade coming? If they do? Isn't the most likely spot for the next entry down there? I don't want to sit through that retracement. I want to get paid. And when I get paid, if they retrace after, I'll get back in. I've got rules for that. Does that make sense? Guys, this is awesome because if you're in the funding company, trading with direction is one of the greatest advantages you could ever have. Knowing where the market is likely to go is amazing. Understanding where the market is likely to stop is incredible. And then just finding a way. Trina, do you see that down bar, up bar? That's an awesome place to put your stop if you're trailing. The sellers tried, they failed, the buyers took over. If the sellers kick in again and they get below that spot where the buyers stopped them, I'm done. Trina, odds favorable momentum. They broke away. It's with the triggers. There's room to trouble. Isn't that a momentum style trade right there? Isn't that the rules that we talked about? So now if they pull back, guess what? I'm adding 2 on with a momentum trade. And where does that momentum trade fail? Right there, about 4 ticks below that green zone. I got to give it just a little more room if I do it. This is like house money. Even if it loses, I'm still up on the trade. Once you know your rules, guys, and you know how you don't get the momentum style trade? When you're in a trade and you want to add contracts, they're like, haha, we can't give them that. Darn Nexgen monkey. No way. Such is trading, guys. If you know why, it's not hard. Do I sound emotional? Do I sound fearful? Or do I sound like I don't know exactly where my exit comes from? Exactly what the expectation is if they pull back to this area? Exactly where they're most likely to go if they are able to crash through those areas? Guys, I got it all mapped out because my plan tells me exactly what to expect. Doesn't mean it'll happen. Uh-oh. Now my smalls are inside of my large, Trina. That's not momentum. I'm not comfortable taking a momentum style trade there. Seems like a lot where? Up here, Justin? It is. That's my target. This was resistance. And it broke. And it just pulled back. And now it's behaving as support. And my stop is behind it. And I'm trying to get to that resistance. Justin, that's a target. That's not a problem. That is a target. 100%. All that stuff above me is where I want to get paid, where this momentum says the market is more likely to go. You tell me, Victor, is this support or resistance? It's support now, right? So if it pulls back to an area and gives a close above, does it fit your rules? It just pulled back to the area here. If you get a close above, does it fit your rules? This used to be resistance. Now it's support. We've pulled back to it. What do I need? I need a close up here above the small triggers. 54 to 61 is plenty of room. But if they get me below this zone right here, guess what? My next trade comes from down here. I'm out. So now I either take a close above or I get in down here. Those are my only 2 options. Those are my only 2 options. How'd we do on that one? That was 1240 on a 4 lot. That was 1240. Triggers down. How amazing would a trend trade from the mid band be? But if they give me a close above here, I got nothing but room. Do you guys see how I have 2 options right now? If it doesn't go from here, then it's probably more likely to go from here. If it doesn't make it to here, a close above fits the rules. But I've got 32 seconds to think about it. HVA line doesn't scare me. My triggers are up. I'm on the strong side of the triggers. Life is good. That's not an area that's used for a trade in this scenario. So here we go. 10 seconds, 9 seconds, 8 seconds, 5, 4, 3, 2, 1. There's my close above. Stop goes below the pivot. Profit target at trouble. Let's see if it goes. It might not. It might. Who knows? Does it fit the rules? That's my question. Does this trade fit the rules? Yes. Am I on simulator? Yes. Should I take it and see what happens? Because if it works, it's going to reinforce trust. It's the same look as here, right? Pull back to an area, close above, pull back to an area, close above. Above the small triggers, the large triggers are up. I'm on the strong side. I've got room to trouble. There's nothing that says this market wants to go down. Doesn't mean that it can't. Doesn't mean that it won't. My stop is below the pivot low. That's where the market shouldn't go. I've got $215 per contract risk on this particular trade. Let's let it play out. Are there any questions? Am I doing it right? I hope so. I sure hope so. Yes, of course I am. It's my job to do it right in front of you guys. So we'll just let it play out, guys. I don't know what's going to happen. I never know what's going to happen. I never know if it's going to win or if it's going to lose. I never know if I'm going to get stopped out or if it's going to run. I don't know if it's going to blow through my profit targets or if it's going to stop 2 ticks before it. The only thing I can ever know 100% is if my rules were met. And if my rules were met, I'm obligated to take the trade. I'm obligated to enter the market because my rules win more than they lose. That's it. I've proven it. I have proven that my rules win more than they lose, which means if this one loses, who cares? Here's a question. If it pulls back to support and closes above small triggers, would that be considered another entry? What do you think? Up, strong, room, pull back to the area. Anyone nervous for me? Mark, get out. What if it loses? Mark, get out of the trade. What if they come get you? Who cares? They can have my money. If they're going to work that hard to get it, they can have it. There we go. They got me. Happens, right? It happens. Part of trading. If I get a close above those small triggers, are my rules still met? Yes. If I don't get a close above the small triggers and it pulls back to the mid band, are my rules still met? Yes. I took the short shot. Didn't work. Don't care. I am paper trading, guys. I'm building a foundation. I'm learning to read my indicators. I'm learning to recognize my rules. I'm learning to trust my entries, to be patient, to wait for my entries. I'm learning to create expectations based on the large chart read. Guys, I'm learning to just get in sync with my indicators. That's what this room is for. And in the next 55 seconds, we'll know whether or not the rules are met again. Do you guys want to stick around, stay after class? Look at that. I'm glad I got out below the pivot low and not hope that the area holds, right? Pretty cool. So let's see what happens. This is still support, right? Because it hasn't broken. I just want to make sure that I'm following rules. It's still support until I get a break away from it. This is an area that could stop downward progress. I would love a close on the correct side of the triggers. I've still got 20 seconds. That gives me lots of room. Does that make sense? Still support. Pull back to it. They tried to go. They couldn't. I love that look. Try and fail, right? 4, 3, 2, 1. Still no new entry rules. Sit on your hands. Sit on your hands. Wait. Be patient. You know what stinks? Is when you get so married to a trade and it comes down and you trade directly into the VWAP. They're trying to break it. If they do, there's my lower areas. They haven't reached anything on the large chart. I've got 27 seconds here. Are they going to give it to us? Oh, glad I didn't jump the gun. Glad I didn't jump the gun. Anyone other than me ever try to anticipate the entry only to find out that you suck at anticipating entries? Get in at the high tick and watch it run you over? Once or twice. Man, still no rules met. You know what I like about this though, guys? Do you see how it's doing that slide? It's weakening those triggers. Oh, 47 seconds. Does this make sense to anybody? Is there anyone that's not really following what's going on? This is it. This is your trading plan. Roadkill, what does that mean? It's delicious. I'll thank you not to judge. Little Tony Sacheries. I'm still sitting at support, right? What's a bad entry? Where? OG? There hasn't been one yet. There haven't been rules for an entry. So yeah, if you took one, that was a bad entry. Are you calling my entry a bad entry? It fit the rules. Okay. Mine fit the rules. I had to take it. Obligated. And look at that. Now we get our break below, right? Now support's behaving as resistance. What's going on, Mike? Good to see you. So Victor called it. Now our next area is the mid-band. They either make it or they don't. Sure looks like they're gonna. But now we got to start gauging. If I get an entry somewhere in this area, do I have room back to trouble? And from the transition side, do I take partial profits at that trouble, get to break even and see if it breaks? VWAP is not an entry area, Victor. Well, it's not per the plan. It might be for you. Split targets, Trina, done. If we get an entry, we'll split them. Isn't it funny how we had to wait till the very end of class for this to all come together? Let's blow it up a little bit. Let's make sure we don't talk ourselves out of stuff. 37.75 is the right side of the triggers. 41.50, that's not $100 worth of profit for me. That's a no-go for me. Now I'm getting below the VWAP. Son of a gun, right? So my entry has to be, there's support. Tap it. Give me that tap. Come on, get there. Feel it. Be good about it. Get a close above. Whew, that's tight, guys. That's tight. Capital T. Does anyone want to fight odds favorable momentum for 60 bucks? Is it okay to demand that we get the best entry? Trina says no. Trina says no. Trina says, Mark, let's see if they give us something around 35, because then I got room to make money. I'm at the tail end of where I can be, guys. I'm back into that one. There's market flow. Market flow's on there, Mike. It's on my 1 minute chart. Man, those haven't been around for, I don't know, 38 years, 39 years. John took those off a long time ago. Nope. It does on the large chart, area not to trade into. You still use it? A lot of you will just say seasoned guys. There's nothing wrong with it. But when we talk about it now, Mike, there's it doesn't add value anymore. Not for new users. For you guys with an established plan that uses it, the value is there. For new users, We can get the information we need off of market flow without it using breakout bars, HVAs. Man, if you want to watch a video, even if you don't want to watch a video, I'm going to give it to you. I don't know how long you've been gone. And I feel like it's been forever. Probably just because my heart broke a little bit when you left. John goes over using these white breakout bars in these. It's awesome, awesome video, 10 years. It's an awesome video. But it uses these white bars, the high volume areas, and where price opens in relationship to them. Whoop, that was our entry, wasn't it? Did we get above the VWAP? We didn't. I broke rules. Let's see if we can get our butts kicked by breaking rules, or if they're going to give us a little bit of love. Trina, you said half profits, right? First sign of trouble? First sign of trouble? Yeah, I know, right? He just needed me to help him go through it. One of the things about the bot, though, Mike, is nobody believes them, but you really got to work that small chart management. It's a bot for entries. Small chart management is the key on that one, and he's working with some programmers to get it to automate some of the management ideas. It's cool stuff. It's been so much fun working on it. Guys, I broke the rule again. I traded directly into the VWAP. So that's a rule break. I got away with it once, right? Because the market loves you to get lucky. Let's see if we can pull it off twice. Where's our second target go, Trina? Mid-band? Does that sound like a good one? Okay. Didn't have any room to the mid-band on the small chart either. We totally broke rule number 2. I hope we lose. Not gonna lie. Teaching bad habits. Well, it just depends on the rules. There's times where the mid-band is a termination condition. There's times where it's not, Mike. So it depends on your plan, right? Don't fight trouble. One of the smartest things you'll ever hear in this room. So Trina, if you tend to break a rule, you exit. I don't think there's anything wrong with that. Sometimes you'll say everything is up, but now I'm on the weak side, right? I've dodged the bullet. Look at my small triggers, though. My small triggers are going up. We could reduce risk, right? I'm not going to lose a lot on this trade if it doesn't go. I know I'm breaking rules, but I'll give it a shot because the large chart says more up. And at least now I don't lose 1,000. There we go. So how do I avoid this loss? Everybody type it in the room. How do you avoid taking that loser? There's one thing that you can do, and you never have to take that loser. Have room on the small chart. That's it. I told you I hope that it loses. Mark traded into trouble and lost in front of everybody. That's the lesson I wanted you guys to get. Do you notice that I was just as confident? You'll do that when you break rules. Trina, I love that. If you accidentally break a rule, it's okay to exit instead of hope, right? And if you're really close, sometimes you'll even make a couple bucks breaking the rules before you take that smarter exit and look at it. Zoom. Good stuff. All right, guys, that's it. I ran over today. I'll be back tomorrow morning at 9 a.m. We'll do it again. We'll just keep doing it until you guys get so sick of me and so good at following rules that you never deviate, right? You never hesitate. If you need me, my email works. If you need me, you can message me in Discord. Reminder, nobody in Nexgen will ever ask you for money in Discord. If they do, report them. It's a scam. I'm out of here, guys. Oh, look at that, assholes. Wouldn't this be a close above after the pullback to support? And this time there's nothing in the way? Uh-oh. Uh-oh. I still have 9 seconds, though. But that's above everything. It did pull back. My triggers are up. 3, 2, 1, go. Run, Forrest. Doesn't guarantee a winner. But at least now I'm not trading into stuff. All right, guys. I'm out of here. Let me know how that one works out. You guys take care. Be good. Hi, baby. What's up, Mama? What's up, Mama?